Welcome back to Real Estate Mindset. This video is gonna be absolutely bonkers, and I apologize, guys. I'm a little bit slow to start. When I was about to start this live stream, I actually noticed that the back of my hair, like in this little area right here, was sticking up like alfalfa from the Little Rascals. So I had to go run back into my bathroom and just coat this area right here with hairspray in hopes that it would just fix the problem, just like the Federal Reserve printing money and hoping that problem will be resolved. I did the same thing right here. So anyways, you guys, so I'm just adding to my nervousness, but I am excited to do a live with you guys. You guys know that I love doing lives, and I'm going to do something a little bit different today. I'm going to try to actually record a couple of videos within this live and then come back later and then record those down and release the videos. That's my intent. I don't know if I'm going to do that or not because, as you guys know, I'm a little bit rusty on the lives. And anyways, so I'm going to go over a couple things, essentially what we're going to go over today. But before I do that, I want to kind of go over one of the videos that I released yesterday, basically about a hypothesis I had that basically if the Federal Reserve pivoted right now, what would happen to the housing market? I just want to reassure you guys that in no way was I saying yesterday that the Federal Reserve did a full pivot. But what I wanted to do is basically, act as if the Fed did a full pivot right now. And what would that look like for home prices? Now, obviously, the inflation report came out this morning and it was a bit soft. But you guys know that my primary concern with inflation and where I think our biggest holdup is when it comes to inflation is the inflation in the shelter, right? Which accounts for roughly 30 to 40% of CPI, but also home prices and really the whole housing market in total is really overinflated. And it's going to be very difficult to get that inflation down because it's stickiest in the housing market. We know that it takes longer for home prices to go down. So, in other words, guys, I still think we're on course. Home values are still, overboard, and way out of people's reach. It's just the unaffordability, you guys, regardless of what happens, if the Fed pivots now or they don't pivot now, I don't know how we could possibly sustain a housing market with, such a lack of fundamentals. So I just wanted to make it clear, guys, I boxed myself in yesterday. That was an extremely hard video for me to make because I had to think for probably 2 days on what would happen if the Fed did full pivot, right? Full U-turn right now. And I believe if the Fed does do a full U-turn, right, which they haven't, okay, so everyone settle down. They have not done that. But, again, I want to plan for the worst. And to me, the worst is the Fed doing a full pivot. But even if they, even if they do that full pivot, unaffordability is completely out of control. If they do a full pivot right now, hyperinflation, obviously home prices go back up. Homes become more unaffordable to local population and any new home buyers. So the thing is, guys, is really what I want to say is the hypothesis I did yesterday, boxing myself, and that was very frustrating for me. What I really was enlightened about is the difference of homeowners pre-2020 versus post-2021. Essentially, most people that purchased prior to 2022, depending on when, right? Obviously, the closer to 2022, the more at risk. But anyone that purchased prior to 2022 has a lot more ability to ride this wave out, right? There's a huge difference on, home ownership post 2022. So my point also with that video and really what I was trying to emphasize is anyone that's purchasing right now, not anyone, but most everyone, right? You could still possibly find a great deal, become an expert in your local housing market, look at your rent range, look at wedge, right? Market analysis. So, different markets, obviously do different things, but, it's just, you guys, it's just a bonkers, real estate market. There's a lot of things going on right now, you guys. And anyone that purchases right now is just going to continue to be put in that box, right? So there's a huge box of people that purchased prior to 2022. That box has options, probably has equity, probably has low interest rates. But anyone 2022 and on is in that small box, roughly 7 million Americans. And that box is just going to get bigger and bigger and bigger and bigger until it falls apart completely. Because again, remember my point. If you're purchasing right now, mostly, again, if you're not savvy, right, most of the time, if you purchase right now, you're going to be purchasing a home with no ability to gain equity for probably a considerable amount of time. Who knows how long, 3 years, 10 years, right? But purchasing right now puts you in a high risk situation. And that is the point I was trying to make, to you guys. So despite all of the interest rates, plunging, despite the Federal Reserve, basically, and I know they didn't do QE, right? It wasn't a technical bailout. They're just saving depositors, right? I get all of that. But the thing is they're not just saving depositors, you guys. They're saving the banks, right? They're allowing multiple banks to go and basically trade in toxic underperforming assets. They're basically resetting purchasing power for banking institutions, or financial, it's just institutional investment, right? So they're basically giving another leg up, in my opinion, to institutional investors and to banks. So now they've been reset. Their purchasing power has been reset. So what's to stop them from going and purchasing real estate now, right? So, all in all, you guys, the American people are taking an absolute beating here. We're the ones that are going to be having to pay this. And I hate to say this, I am in real estate. You guys know that, but anyone that is purchasing right now is paying the bill. They're the ones that are going to be paying the bill. They're going to be the biggest at risk. So, it is what it is, guys. I just wanted to make that clear. Hopefully I did. Now, before I begin, I want to show you guys a couple things real quick. Okay. So this is the first article we're going to go over right here. This is Western housing market. And this is really going to go over really the division in America right now. And as you guys can see here, there's a lot of, negative price decline here on the West Coast right here. So we're going to go over that stuff as well. And really kind of just, sorry guys, really just decide, why is it the West Coast predominantly is having massive price declines? Because right now what we know is, and that's why I talked to Jeff. Jeff is my friend, you guys. I know you guys hate me talking about him, but I love you, Jeff. And, Jeff is in a really tight market. So we're going to ask, why is it spreading unevenly? We know it's on an uneven spread. We're also going to take a look at the mortgage monitor through Black Knight. This has some really good stuff in here, you guys. I suggest you guys actually go here. This is really painting the picture as far as like behind the scenes, what's going on as far as defaults, right? So that's going to be the first segment, is talking about price cuts specifically on the West Coast, why it's not spreading, why it is spreading, and things like that. Now, after that segment, guys, we're going to go into the rental market, because you guys know I've been preaching to you guys about the rental market and how the rental market is getting crushed. And I'm not just talking about Airbnb short term, right? And that's getting crushed globally right now, but also the rental market long term is taking a beating right now. But the interesting thing is remember, not in every area, because remember, real estate is hyper local. Now, we all wanted the crash to spread immediately tomorrow in every metro area. I really wanted that as well, but we didn't get that yet. And we're also going to go into the article right here. We must recognize that the eviction crisis is also a public health crisis. So I'm going to kind of end right here with the mental health and the eviction situation, because I really want to remind you guys who's really paying the true cost of all of this chaos, inflated prices. It's the lower class, you guys. And the mental health and the mental turmoil that you go through as, a husband, a wife, a mother, a father, to go through unaffordability and eviction, I can't put it into words. And you guys remember, and I'm just trying to be transparent with you, I lost everything back in 2009, right? I had a bankruptcy, foreclosure, repo, and a tax lien. And I lost everything. And I tell you guys a little bit, and I don't jump into this a lot, but the mental turmoil that put on me, guys, and really the depression, it lasted for almost a decade. So it's very real, right? And here's the thing. I just want to put this on a side note, and then we're going to look at the market. We'll look at the 10-year. We'll look at the stock market real quick. Holy smokes. The 10-year right now. The 10-year is in dangerous territory. But the thing is, people purchase for different reasons. My point of this channel is just to caution you, okay? I know I'm sharing my hypersensitive opinion because I did lose everything, right? I did lose everything, and I've been in real estate for over 20 years. So I am hypersensitive, but really what I'm trying to tell you guys is be cautious, please. You don't have to listen to me and agree with all my opinions, but just please be cautious and understand people purchase for different reasons. So I'm not knocking you if you have to go out and purchase. Like, for example, if someone has money locked in a 1031 exchange, or if someone is really going through a lot of mental turmoil, but they're a well-positioned buyer, fine, YOLO this, go buy a house, move on with life. But, make sure you're doing a lot of preparation to weather the storm, because the storm is here. Okay, the storm is here. We found that out over the weekend with the bank runs. What was really a surprise though, because that was the start. Over the weekend, I'm like, yes, here we go. We're finally here. And like the hairspray that I put on my alfalfa sticking up right here, just come on, fix the problem. And it looks like it is fixed. Similar with the Federal Reserve, right? They're just trying to throw money at the problem, but they're not helping. And I want you guys to understand this. And I talked to Jeff a lot. Jeff's concern is they're just going to print money for the poor, right? For evictions, for mortgage, for foreclosures and things like that. And I'm like, y'all, what have we learned about the government, right? If they cared so much about the poor and the people that are struggling, then why do we still have the issues in Ohio? Why aren't those people evacuated from their town? There's so many reasons and so much history that I could show you guys. The ultra rich are the ones getting bailed out. Okay. The poor, lower class, you and I are going to pay the bill. And that's why it's so important to vote. And I'm not going to tell you guys how I vote. I don't want to talk about politics, but let's not act like our officials aren't important. And here's the thing, you guys. And again, I'm not telling you who I voted for, but we have we have Biden as our president. Okay. And whether or not I voted for him, and I'm just going to say this. All right. He's our president, you guys. Okay. We want him to do well. We don't want to wish bad things. Now, unfortunately, the evil and things like that make it, it's just, I don't think I want to talk about this, but the thing is like, what other option do we have but to support who's elected, right? I'm so frustrated, you guys. I'm so frustrated and heartbroken, not only for my situation, but also for y'all's situation, because look at what we're doing. I've eliminated so much risk from my life. I've downsized into this rental house right here. You guys know I also own a property. I have a 2.125%. I converted my primary residence into a rental. I lost my tenant recently, so we're trying to rent it right now. I have considered selling my house, but why would I do that? And another thing, again, and I'm going to get started here in a minute, and I'm going to show you the market. Now, remember my hypothesis. Say the Fed, again, this is just like worst case scenario. I'm just like, Travis, what if they do U-turn right now? Again, my hypothesis is even if they U-turn right now, the house market's still in deep trouble. The house market's still very unaffordable. It's still broken. So I see a string of cash out sellers. Now, the argument can be made, won't most people just refinance or do a HELOC to pay off consumer debt? And yeah, that's an option. Generally, and that's kind of what happened in 02 to 08. A lot of people were using their houses like ATM machines and wrapping up, debt over 30 years. So it's an option. But, if, because I had to think about it, why would I sell my house, right? It would be to cash out. But I want you guys to know that there were a few comments on that video that I did where people was like, man, I'm in that same situation. I'm drowning in consumer debt. I own a house, right? I have $100,000 in equity. I have a 3% interest rate, but I also have 40, 50 grand in credit card debt and I'm suffering. And it's very appealing. And these are the comments that I was receiving. And it's very appealing to me to sell my house, pay off all my debt, pocket $50,000 and join you, Travis, on the sideline, waiting for the market to rebound. So that's the thing, you guys. I know it was just a very hard video to make. It was a very hard video to make because I was really boxed in. I didn't talk about, a lot of other factors like, the home building overexposure in certain markets. There's a lot. I didn't talk about short-term rentals. I didn't talk about long-term rentals. I only talked about like resale inventory. Like what happens, how do we get the current owners with 2 and 3 and 4% interest rates, how do they start forced selling? And the only thing I could really think about besides the obvious, and I didn't go on the obvious, like the relocation, job relocation, divorce, and health. So I didn't go over that. It was just simply unaffordability. It's unaffordability. That's a systematic, flaw and error and devastation right now in the market is the unaffordability and how sticky that is with the housing market, with shelter, with the ability just to live. I don't care about eggs anymore, you guys. I just won't eat eggs. I'll eat oatmeal. And if oatmeal goes up in price, then I'll eat cereal. Cereal goes up in price, I'll switch back to eggs. I don't care about that stuff as much as I care about the roof over my head. Do y'all see what I'm saying? So all this dog and pony show and the song and dance is just, I think there's a lot more going on here than we realize, you guys. And I think we saw it over the weekend. The Black Swan came out. They try to slam it back in the box, slam it over the head with money printing. And I know that they pay the money back, but that's the similar thing that happened in the 2008 bank bailout, right? They paid the money back as well, but the money came from us, taxpayers. But anyways, you guys, I don't want to argue. I don't want to argue that. But first, before I really get into the Fortune magazine article, I want to show you guys where we're at with the 10-year real quick because this is shocking. Okay, look at how we woke up. Look at this, you guys. This is insane. Oh my gosh, Luke, I see you, Luke. We got Luke here, you guys. We got Luke. Okay, hold up, Luke. But you guys take a look at this. This 10-year is absolutely plummeting. I'm going to get you on, Luke. This 10-year is absolutely plummeting. Right now, we are down to start the day 17 basis points, almost 18 basis points with that 10-year treasury. What that means is obviously mortgage rates are going to go down. But I'm going to tell you guys right now, they will not be going down at the mortgage interest rates will not be following that 10 years closely right now. And the reason that is the lenders aren't going to give up their position, right? They're not going to give up their position. So, we had a massive drop in the 10-year the other day, but mortgage rates, like I said, mortgage rates only dropped about a quarter point when they should have dropped 5/8 of a point. And the reason they didn't drop that 5/8 of a point again is because the lenders right now are holding on to that, position or that profit or that margin. Right? So you're like, oh my God, the 10-year went down, rates went down, but we're going to hold on to this margin and we're going to profit off of this, right? So really interesting, but look at this guy. I mean, it's down to 3.51. So pretty crazy crazy stuff here. Let me see if I can get Luke on here, guys, real quick. Luke, can you hear me?
Hey,
Hey man, how are
I
you?
can hear you.
Can you
I
guys hear
am
Luke?
good.
Let me know if you guys can hear Luke. Dude, I didn't put my earphones aren't working, man. My earphones aren't working. Okay. Can you hear me?
Uh, I can hear you.
Okay.
Yeah. Can you hear me?
I can hear you. Can you guys let me know, guys? Can you hear Luke?
There's no echo, is there?
I don't think so. You guys tell me if there's an echo. Comment if you guys can. Okay, good. Okay. Yeah, Luke the father, right? No. Darth Vader's the father. It's the opposite. So
Yeah, exactly.
So let me introduce you real quick, Luke. So you guys, Luke is one of the men, one of the content creators that is part of our group with, Orlando, Steve, Todd, Scott. And we all kind of just talk and hold ourselves accountable and really kind of just bounce off of each other. So Luke is a great guy. He has a YouTube channel called Market Mania. It's predominantly in Canada, but I absolutely love this man. And, he's kind of a little bit like me where he loves content creation, like drone shots and like cinema, right?
Yeah.
So we're always talking about cinema stuff because we love content creation. But Luke, brother, talk to us, man. What's going on, man?
Oh man, it's like a casino out there recently in the markets. It's just absolutely crazy. So thanks for having me on, Travis. It's great to speak to you. I haven't been on here before. Fantastic to speak to you. But yeah, like absolutely insane. We've seen these massive swings in bond yields. We've seen the Fed coming in with a bailout again, which just I'm angry like you, brother. I'm absolutely fuming about it. I don't like it at all what they're doing. And it is essentially just QE, which I think is just terrible when you really think about it, considering all their talk and then they just flip flop and do QE like that. Not good at all.
No, man. I mean, it isn't good. Were you surprised by the bailout? Were you surprised by that action over the weekend?
Yeah, I didn't think that they would actually do that. But then again, I think it was just the fear over all the contagion, right? Because there was runs on First Republic. It looked like they were going to fail on Friday. And then they created essentially a line of credit where they can just trade these toxic assets for bank reserves, which is essentially QE, even though it's just a lending program for a year. It's temporary, as they're calling it, but we know how long these temporary things last. So I was pretty surprised. I thought they would just let them go, especially considering like the bigger banks like JP Morgan, Citigroup, they would probably like to see these banks go down, right? So it kind of was a little bit weird to see them flip-flop like that. But it's not good because they're bailing out the like why should First Republic get a bailout and SVB doesn't? Like it doesn't make any sense, and that's what's super frustrating about this whole thing. And it doesn't look good out there. Like the oil market is screaming that we're heading into a deep recession. And it's been screaming that for a while now. Like a lot of people are asking why oil is down so much, and that's why it's pricing in like big recession. I mean, there is massive supply concerns about oil, and you've got it down. I mean, look at it today. It broke below the lowest level since December 2021.
Take a look at this, dude. This is crazy. So now the bond market's not supposed to do this. So
No.
this is crazy. I mean, do you see this, man? I mean, so
Yeah.
now just since we've been on, it's gone down even more. The bond market is down. I mean, the 10 years down 20 basis points. This is kind of dangerous. Last time we saw it hit this, that's when we had a lot of people rush back into the market to purchase, Luke. Then we got some hot, inflation reports. Not that I trust them, but what are you saying? And look at this. Let's look at the market real quick. Oil is
Yeah.
down. Yep, oil's down 3.48%. Gold's rallying a little bit, but everything is down. Dow, S&P, Nasdaq is down. Yeah, I mean, so what are you seeing? Tell us what you're seeing in Canada, Luke.
Yeah. I mean, in
Like,
Canada, we're seeing a mirror of what's going on in the States.
so you're seeing a lot of like price cuts and things like that in Canada as well.
Yeah, I mean, the big markets were way more inflated than even in the US, and Canada has like a massive immigration bubble, and they've built kind of a subprime mortgage industry on the back of that. After 2008, Canada really didn't suffer that much, and they saw that as an opportunity to create essentially a bubble similar to the one that was in the US during 2008. So in these bigger markets that were just absolutely, like, I mean, the income, like when you're talking about housing prices versus income, it would just blow you away compared to some places in the US. I mean, in Toronto, places like that, average household is making like $90,000, and I think the average home price at one point was, like, for a single family home was nearly at $2 million. Like, how does that make any sort of sense? And we're seeing all these gyrations in the bond market right now, and I think again you got to ask the question, why is the bond market going down so much? It's because it's pricing in some sort of crisis event, which isn't good. So I think people trying to front run that in the housing market, they could get mauled, absolutely mauled and destroyed, and it may not happen immediately. It may take the course of a year to all play out, but I think it's a dangerous time to be operating in any of these markets and not really understanding what you're doing, playing by your emotions.
So let me ask you, man. So obviously, what was told to us is they're trying to calm people down. With the bank runs, they don't want people to take the money out of the banks. That would obviously cripple the banks. And really, I think that should really enlighten the public on like what the bank actually does with their money. I mean, think about it, Luke. I mean, we're giving the bank our hard-earned, like we pay taxes, we've earned it, we pay taxes on this money, we paid our expenses, we have the savings now. We give it to the bank. They take that money, charge us. They're taking our money, they're charging us fees, and then they invest the money. We want our money back. They don't have it. They go out of business. So I'm thinking to myself, why do we have our money in the banks again? But look at what Jeff is saying, man. A lot of people got a lot of the ultra rich got hit in silicone. Okay, you guys, it's a joke. Silicone. Okay, I'm from SoCal. Real quick, Luke, I'm gonna rant. I'm from Southern California. I feel like I have a right to call it
Silicon.
Silicon Valley. Okay, Robody, right? Silicone. We'll just say silicone. But just so you guys know, it is pronounced Silicon Valley, right? Like con artists. We go all place with the silicone and silicon. But I'm just gonna say silicone. It's my little thing, but I just wanted to plug that. But Luke, what happens next, man? I mean, is everything going to be okay? Let me, from your perspective, you're in Canada, you're watching this go down, you're a very intelligent person, obviously. And I have my own opinion, but I want to hear yours. Are we in a pivot? Are we in a U-turn? Will the Fed get us to a soft landing here in America? And are we doomed with high prices on houses forever? Is this something that we should get used to?
It's difficult to say. When I think of home prices, I always think of inflation adjust home prices. So I think in the future we're likely going to see decline in of inflation adjusted home prices, no matter what, as inflation is just going to be there for a long time. You've basically got politicians all over the world, not just in the US and Canada, that have worked out that doing direct transfer payments is now a great way to buy votes. And I think that's dangerous because that is the main cause for our inflation. And we're seeing this in Canada right now. Most provinces, which is like states, same thing as states, are doing stimulus programs where they're doing direct payments to people for inflation relief. These are, when you think about these payments, they're literally high velocity money that's going to be spent immediately into the economy. The yield curve is screaming that bad things are going to happen, Travis. So I'm a long time believer in the yield curve. I sold all my entire portfolio right before 2019 when right before 2020, sorry, when the yield curve inverted, and then we had 2020 and everything like that.
Let me ask you, man, and let's pull up a question here. A big shout out to you, man. Thank you for the super chat. I appreciate that, man. Means a lot to me. Look at this comment, Luke. I'll read it to you. I like, yeah, man. I think I just saw my children walk behind. So I live in a rental house. I just love cinematography, so I love like setting stuff up. If you guys knew how I really want to do my content, y'all would it would blow your mind. But it's like a risk versus reward thing. But I think I just saw my boy just run. But anyways, so look at this comment. This is a very interesting idea and concept, Luke. Basically, and again, shout out, thank you for that love, man. But Powell will raise rates to stress test small banks, which we can't argue that hasn't happened already, forcing depositors to move to the big banks. Interesting. In turn, because that's what I would do if I was in a regional bank, which I'm not. In turn, that will be the bailout for the big banks, and that's an incredible thought, as I believe they are in trouble themselves. So yeah, would you first, Luke, agree that the big banks are also in trouble, unrealized business expenses, underperforming assets, and can you see these bank runs as a little bit of a dirty trick from the Federal Reserve to get people to pull money out of smaller regional banks into larger banks so that the taxpayers don't have to bail out the big banks?
Yeah, that could be the case. I mean, the big banks don't even mark their assets to market. And what that essentially means is, like, if they have all these home loans that are on their books from 2021, people who bought at the peak of this bubble, they are essentially just fantasizing about the values of those homes on their balance sheet. And it's only banks, it's almost criminal, but it's only banks that are allowed to do this. And the big banks do this. So we don't even know the true value of their assets. And that's really the thing that is worrying. And, in the US, the big banks have significantly more assets generally than they have loans. But again, it's like, do you trust the big banks in what they're telling you about their assets? And that could have been the case, that it was a dirty trick to get people to go to the big banks. I definitely think that's going to happen. I mean, think about it. Like you said, Travis, if you were in a small regional bank, you're probably going to think, I'm going to move my money. But really, if you're FDIC insured, like, you don't really have much to worry about. The FDIC is just, even if they don't have the assets to back up bailing out, the treasury's going to be there, the Fed's going to be there with their money printer, and
Luke,
it's
so I got two questions for you, brother. One is going to be about gold, but I want to get to that in a minute because I see my buddy Vital Signs on the screen. Do you see him? He's been
yeah,
kind of with the channel since the beginning, man. I have a special place in my heart for everyone that was with me from the beginning. Like Scott was
same.
reaching out to me when I had like 1,000 subscribers. I'm like, oh my god, it's Scott Walters. So I was like starstruck. I'm still I can't talk starstruck. But Vital Signs is my boy, so I really love him, and I watch some of my subscribers because, man, I mean, honestly, I really care about him, man. I mean, this has really changed my life, and I'm really grateful for it. So I have a genuine love for a lot of these people, many, and I won't go on and on about this, but Vital Signs, let me explain his situation, okay? And I want to get your take on it, Luke. You're from Canada. You're smarter than me, okay? Maybe I'm a better
No.
fisherman, I would like to think, a shark fisherman,
Yeah.
okay? So I'll take that, but you know what? You're smarter than
100%.
me. So I want you to
Nah.
talk to Vital, okay? He's in California. He's in Northern California. I'm sorry, Mid California. California is seeing massive signs of price decline, specifically in Northern California. And I'm talking massive declines, like 20%, 15% declines. But Vital is in an area where the price crashing per se is minimal. Inventory is
Hmm.
low. He's in a local market that is handling this a lot better than northern markets, right? And what would you tell someone like Vital, who's on the sidelines, and he's getting a little fidgety, you know. And I'm sorry,
Yeah.
Vital, if I'm talking on your behalf, man. But this pertains to a lot of people. Okay, he's getting, because I am as well, man. I'm like getting fidgety, like, oh, I don't want to rent anymore. Oh, this is right. Like, I'm not saying what I wanted to see, you know, exactly how I wanted to see it. But what do you tell people to give them encouragement, Luke, that by waiting right now is the best thing they could do? What do you say to that?
Yeah, so I mean, you've got to think about what's going on with the yield. Well, I know a lot of people don't look into this, but the yield curve is screaming that something bad is going to happen, and it's right like 99.9% of the time. So that is a reason to be concerned about everything that's going on. I always say trust in the yield curve. Everything else will work out.
Yeah,
One question
yeah,
that I would ask him is a lot of these markets that are performing a little better are typically lower priced. That's always a question that I would first ask, because
yeah,
if it is like a lower price market compared to the rest of California, it could just be a lot of the dumb money, because a lot of the dumb money, essentially what happens when these bubbles start to blow is they move from the bigger bubbles to smaller bubbles, and those are often lower priced areas. So we see exactly the same thing that's playing out in Canada right now. And people think they're seeking a refuge by going to an area because the price is lower.
yeah,
But to
yeah,
me,
yeah,
it's like investing in penny
yeah,
stocks as
yeah,
opposed to investing in high caps. When you actually really think about it, a market like Los Angeles has a big economy behind it, right? But some small regional town that could be entirely dependent on oil or natural resources, let's say, that can have a big bust if like oil goes down in prices or something like that. Like home prices could tank significantly. So, and the other thing is like there's a lot of remote work that has been
yeah.
going on in California. California, especially with this tech route that's going on,
Yep.
I would be extremely concerned about that. Like, I don't think times are going to be good for these tech companies. I know a lot of people are
Yeah.
thinking, oh, yeah, these tech companies are just going to bounce back as soon as the Fed pivots and QE. Yeah.
I
And
mean,
go ahead.
yeah. I mean, Luke, like I get the frustration, man. I mean, it breaks my heart to see them struggle, especially people I care about. Like Jeff, I put his comment on the screen. Jeff's in an area that is still affordable. Like his area that he wants to buy in is kind of surrounded by unaffordability, and
Hmm.
it's kind of like that last bubble of affordability. And now that everyone's going to that market, it's creating another bubble. So we're going from one bubble, people are fleeing the bubble. Do you guys see that in the background? I keep seeing it when I look over here. I don't know who's running back and forth. I love my family so much. Um, anyways, so yeah, the migration has shown us it's a problem. That's predominant reason for the uneven disbursement of price crashing, because in a lot of these Northern California places, it's not overrun by new construction, like is another theory I have. In certain markets, new construction
Hmm.
is crashing prices. In Northern California, it's like a tech bubble meltdown situation. And I'm going to do another video, Luke, on how affected the owners are that are working from home that now have to go back into work, right? That is hitting them like a gut check. But let me read Jeff's comment right here. I love talking to Jeff because Jeff and I like agree on a lot of things, but we don't always agree on the outcome. So it's a
Hmm.
really kind of iron sharpen iron. But look at essentially, I think what the market's telling us, Luke, is the market does not like the 2 and 3% out there, right? Like people that
Hmm.
have a 2% mortgage, people have a 3% mortgage. It's actually crushing the housing market. Who would have thought,
Yeah,
right? So like the market's
I
like, oh,
know.
we need these 2 and 3% out of here, get out of here, right? That's why I ain't selling my house. I got a 2.125. You can't touch that. All right. But look at his comment. Everyone who got a 3% mortgage, we, the taxpayers, will be paying for it. Property taxes. So I would agree. All of these lenders are going to turn these mortgage backed securities to the Fed and get face value for them one day. This is the new freaking, excuse my language, this is the new joke. And Luke, do you blame him? I mean, a lot of people are like, oh, it's conspiracy, blah, blah, blah. But like, do you blame him for saying that's exactly what could potentially happen? Would you agree with that?
Yeah, yeah, it totally could happen. No, I totally agree with that.
I mean, Jeff has some good points. All right, now what do you think about this one? Again, Luke, you're smarter than me, and your hair's better than mine.
It's
Did I tell
not.
you, dude?
I
60.
look rough. I don't know why I look so shiny either. I look like a
I do too,
freaking.
dude. You're good,
I'm not.
brother. You're good, bro. But man, like 60 seconds before I started this, like I noticed like this huge hair was sticking straight up, right? So I did what Jerome Powell did, but with hairspray, and I just held it down. And I just caked it on. I ran back here, panicked, knocked over a bunch of things on the way in here, moved Darth Vader, shut the door. I was like, "Hey, welcome back." But look at this comment right here. WTH is also he's a pretty core subscriber. Love you, WTH. Thank you for this, man. But basically, Credit Suisse is being slaughtered. The 10 years going down. Lenders will become more greedy and keep rates high. Exactly. But buyers don't care of an impending collapse. They will rush in because rates went down. And I just want to say, Luke, I don't know if you caught this, but he's absolutely right. The 10-year is plummeting, but oh my gosh, I'll bring it up in a minute here. Oh my gosh, you guys, it's in dangerous territories. But we're not going to get that immediately back from the lenders as far as mortgage rates. The lenders are going to hold a portion of that position, which means they're going to allow the 10-year to go down, and they're only going to drop the interest rates moderately so that they have higher profit margins. Okay, that's how it works in lending. So good points here. What are your thoughts on greed? What are your thoughts on this, man? And
Well,
credit.
this is happening globally, and that's really something to note here. It's not just the 10-year in the US, it's also happening in Canada, in England, it's happening with euro bonds, it's happening everywhere. So this is a global bond market which is going higher, yields are going down, and it's a flight to safety. And you have to ask, if this is just small regional banks in the US, why on earth is the global bond market, why are Japanese bond yields going down when they're paying like less than 0.5%? I think the 10-year in Japan's pegged to 0.5%. So there's a lot going on. I think this is just proof that there is something big
Yeah.
going on under the covers here that we can't see,
Jeez.
that is going to come to fruition at some point.
I mean, the banking fall. I mean, look at the bond market, Luke. Holy smokes, dude. 24 basis points down on the 10-year. How is that not signaling there's a black swan? It's rearing its head up. Um,
Hmm.
Someone made a comment. B of A got like 15 billion in deposits. I mean, it looks like we're in store for a regional banking collapse. That's what this bond. I mean, that's what it's showing to me. I don't know about you. Let's look at the stock market. So even though CPI came in low, look at regional bank ETF. Blah 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 blah. Low housing demand for doldrums just this spring. Blah blah blah. So home builders are saying demand is picking up, but home builders are ridiculous right now. But look at the market still crashing, Luke. We have articles about home building. I'll come back to that, but unbelievable with that 10-year. I'll take a
Yeah.
look at the 2-year here in a minute. Let's bring up. I brought up this question. I think you can better answer this, Luke. I try to stay away from politics, as one yes, but also the stock market. I don't feel like I'm educated enough on the stock market to really be talking about it. Can you talk about this comment up here, Luke, which is basically that I should make a video on the odds of a crack up boom or a melt up, I believe, in the stock market. And first of all, I can't see that happening, but can you talk about that and
I
whether or not
think
you
we
can see
kind
that
of
as a possibility?
I think we sort of had a melt up in the stock market during 2021. I mean, none of that made sense whatsoever, and it was all to do with credit and lending. But I think the monetary system and the credit system is going to fail. It's not going to be like a fast thing, though. It's going to take place over a decade. And if you think about what happened in 2020, there was big bailouts that happened in 2020, and here we are in 2023, and once again, we're having bailouts, the system is starting to fail, and we're only like 3 years later after that. So the monetary system does not look stable. And then you have to ask yourself, I think inflation is really going to be the key thing here. Because if the Fed is unable to get inflation down, which they probably won't be able to get it to 2%, then essentially the bond market could see it like this Fed has lost control, and
Yeah,
then you have yields explode. They do the opposite of what they're doing right now. I
yeah,
mean, essentially, the bond market is the largest pools of money Forget the stock market. The stock market is a casino since 2021. The bond market, however, this is large pools of money. You're talking billions of dollars in movements every single day. When you've got these type of moves, that's telling you that something's wrong. And that's not telling you that there's going to be inflation. That's telling you that there's going to be deflation in the future. At the end of the day, why is someone going to buy like a 30-year treasury note, which is paying, I don't know, around 3.3% or whatever it is? I'm just making that up. I don't know the exact number. But why are they going to buy that if they think that inflation is going to be 10% for the next 10 years?
Yeah.
So you got to ask that question. But it's pretty crazy what's going on out there today. And, you know, you've got the dollar up significantly as well. I think this is the biggest move in the dollar that we've seen in over a month. So there's a flight to safety, but you can't make sense of any of this. And I don't think any of us will ever make sense of these markets and what's going on. We've even got gold that's shooting higher.
I know. It's like a flight of safety. I mean, well said, Luke. You know, the eyes on the bond market. I mean, the bond market has been warning us, but now it's just like, yo, y'all, like, there's something coming. So take a look at this comment from this. This is why I love Jeff, man. The angles that this man has. I mean, I really do. I can't tell you how much I talk to him. I mean, I know I'm shouting from the rooftop, like, Jeff, like, listen, you guys listen to Jeff. Like, he's in the streets with me. Like, me and Jeff are in the ditches, although he's more in the ditches than me bleeding. I'm just bleeding a little bit. He's bleeding a lot of bit. But look at this that he's saying. Now, this is a very interesting and intriguing thing. I wonder if Blackstone will get to hand over their rentals to the Fed and get face value for them. Oh, I didn't even read this whole comment. Dang, dude. Oh, what if they can? Jeff makes a stunning. That is wicked to think about, brother. Okay, so what if the Fed gives them face value when housing goes down? That's what the new Fed facility is saying to the market. Holy smokes. Dude, that just gave me goosebumps. That just gave me goosebumps. Now, I know we're talking about they're getting face value for the treasuries and bonds that will mature, right? I get that. But what an interesting concept. What do you think about that?
I don't think that would happen. Can you imagine the civil unrest that would result on the back of that? Like, there would be riots everywhere.
There would be riots, man. I mean, and I'll keep an eye. Oil's continuing to go down. Gold is rallying. 10 years plummeting. Did you see the 2-year? Did I show you 2-year? 2 years down 42 basis points, man.
Wow, you know, that must have, and that the other day, the 2-year, the decline on Friday and Monday surpassed Black Monday in 1987. Stock market crash, Black Monday. So yeah, it ain't telling you a good thing. I think it's unfortunate because I think that things will go quiet again. I don't think this is the main Black Swan event that's going to happen. I do think things are going to quieten down, and I think people will get lulled into a false sense of security. They'll get into the housing market. They'll think, hey, rates have come down, and the housing, like the real estate industry, will be cheerleading with that, going, yeah, this is a great time to buy. Interest rates have come down, not realizing why have interest rates come down. It's because it's pricing in like a depression.
Yeah,
like,
man. I mean, that's the thing, and you know. Jeff had a good point. He's like, I'm worried that people are going to run into housing as a hedge towards inflation, like historically is good. And I was like, dude, it is possible, yes, but like housing is like squeezed out. Like the juice has been like squeezed out, and what we're seeing right now is emotional buying. Mostly, people buy for different reasons, like emergencies, 203K or 1031 exchange, things like that. But look at this. This is a good comment right here. Don't settle on the biggest mistake of your life due to impatience, right? And that's the thing I try to preach, Luke. Like when it comes to the biggest financial transaction of your life, you need to treat it like that, like the biggest transaction in your life, and pace yourself. And if you get frustrated because you want to buy a house tomorrow, chill out a little bit and know that you can buy a house tomorrow, but you're going to be joining a box of people that are going to be chained to their house, right? But the thing is, man, is even though, okay, most of it is emotional impatience, but like for the people that are like relocating or whatever, I just don't want to knock them, right? I don't want to knock them because I understand mental turmoil. I understand that well-positioned buyer, well-positioned investors can still possibly find some decent deals. So I don't want to pick, and I hate picking on realtors, man. Like I feel like I come across, I'm just knocking realtors around. Um, but really, it's not all the realtors. It's just a
Just
majority of
most of them.
realtors. I don't like the cheerleading, Luke, because we're in the biggest financial transaction of our lives. We don't want cheerleaders. We want people to provide us data so that we understand what a great deal looks like. And me, as a realtor, investigating my own local housing market here in Houston every day, panicking, stressed out. I want to get the heck out of here. I can't find any great deals. I can't find any good. I found like one good deal. I put an offer in it, and they got PO'd at me and just rejected it and then raised the purchase price. They raised the purchase price.
Jeez.
I think they were
Oh
trying to
my
bait me in.
gosh.
So then they took it off the market and they rented it out. I was like, oh, all right, but it's all good. Um,
Gosh.
bro, so we don't want to settle, man. I absolutely love you being on here, man. How much time do you have? Do you have a little bit more time to talk?
Yeah, I have a little bit more time to talk. I
So
got time for you, man.
well, I did. I appreciate it. I'm completely going off a tangent. I was going to go over like, let me just pull this up real quick. And I just want to show you what's going on, man. And I'll do a separate video on this. I was going to do it, but since I have you as a guest star, whoops, I'm still getting used to my controls. So if I push this button, Luke, I should be able to talk over here.
That's
And then if I just
awesome.
look
I
out of
need
the corner of my
something like
eye,
that.
I can see it's going. But take a look at this, man. This is basically going over how it's, there's two different housing markets. There's the housing market, and they use the word bifurcated, which is
Hmm.
basically like divided in two. So they're basically acknowledging, and this is what I did in my hypothesis video yesterday, is there's basically two types of homeowners. There's the homeowners that bought before 2022, and there's the homeowners that bought after 2022. But there's also homeowners that live on the West Coast, right? And look at this map. So this map is really going into like the division. Okay, it's really going into
Wow.
the division, and obviously it's pointing out that these areas in red, this is off of peak. This is price decline off of peak right here, and a lot of it is, as always, it's starting in California. The conclusion in the article is the reason for this drastic price decline is the tech jobs are getting hit so strongly, and they're also drawing the conclusion like because of the like banking crisis starting in Silicon. I know it's Silicon, but Silicon. Nope. Silicon Valley, that it's going to have even steeper price cuts. But it's intriguing, man. I mean, look at the West Coast. Absolute beating on this West Coast, whereas the East Coast over here, more moderate, right? More
Hmm.
moderate. But take a look at Florida. Florida's starting to unravel. Problem with Florida, Luke, is the migration and demand is like world renowned, but the unaffordability
Hmm.
is catching up. But unfortunately, the inventory is not catching up. We see kind of this pocket here in Louisiana down, and look at Austin down, massively down as well, 8%. But it's very intriguing to see how unevenly dispersed this price correction and price crash is. But just because this is unevenly dispersed, Luke, that doesn't mean that the housing market crash is over. It doesn't mean that we've just begun, right? The last crash was like 3 years decline, 3 years sideways, and then rebound. So this instant gratification is hard, it's frustrating because a lot of us, Luke, have been waiting, before 2022. So I started waiting August 2021, right? So August 2021 was when I converted and I started renting. So I've basically been waiting since August 2021. So even though quantitative tightening basically happened March of 2022, a lot of these people have been waiting for 2 years, and that's why the frustration. So, Luke, does this mean that do you think that it's going to spread? In other words,
Yeah, I think it's going to spread. I think it could definitely pull back in different areas that have some massive declines because the first stage of this is like the interest rate hikes. The interest rate hikes are affecting, like you said, Silicon Valley. And essentially, the second stage of this thing is going to be people's wages when they start to realize that inflation has actually ate a big chunk of change out of their wallet. That takes time to actually impact people because people just see little price increases here and there and they don't realize the impact it's having on their bottom line. So wages in real terms, they've gone down in most places. And then you've got the third stage, which is ultimately going to be the unemployment. And that's really what's going to force
yeah,
sellers onto the market. And I I think unfortunately it's going to be rough. It's going to be rough if you're waiting to buy, because you may have to grit your teeth and watch prices actually rise a little bit as the dumbest money enters the market. Because really, I say like the dumbest money. I'm pretty brutal sometimes in my words. It's because I'm from England. We'll just put it down to that. But but essentially, like the dumb money, they always come in last. And when you really think about it, those people, I mean, they might be getting lured into a false sense of security by the industry. But ultimately, they're not putting a gun to their head and saying, "Hey, you have to buy this house right now." And if they're not worried that something is slightly wrong with everything that we've seen over the past week, then I'm sorry, but I have little
Yeah,
sympathy for people who are gonna buy, and especially people who are gonna cheerlead and say, "Oh yeah, this is great. Rates are coming down. The economy's good." They're essentially going to cheerlead Jim Cramer on CNBC saying the economy is great. Just get in that housing market. Make the biggest purchase of your life, Travis,
I know.
right before the biggest recession since 1987, possibly.
I know. It's scary, man. The emotions are strong. The media is powerful. Social media is powerful. And, I still have sympathy for a lot of the dumb money because I used to be dumb money and I made a mistake. And during the time, I was a total idiot and I deserved it. But, like, I have sympathy for the recovery of the stupid money. Like, when the recovery
Mm.
begins, like their humility, they got no choice but to be humble because they're going to face financial turmoil, financial ruin, possibly. And it's that healing that I have sympathy for because, dude, it took me 9 years to heal, man. I mean, while all these people were getting rich, Luke, investing in housing, at the one of the best times, 2009 on, I was forced on the sideline. I mean, imagine how depressing that is when I was a top player. I started when I was 18, young gun, throwing my money away, very, very intelligent. I worked every single day, probably 70, 80 hours a week. Lost everything. Best thing that happened to me. The most miserable I was in life was when I was making the most amount of money. Think about it. So the most, well, actually, I take that back. Following losing it, right, right. So that was actually the most, well, and then not counting family stuff, but very hard time in my life, man. But take a look at this comment, and I threw this comment up here because there's a huge preconceived notion that people can just refinance, right? And I'm not knocking my man Nicolas Cage. who I love that nickname so much. Nicolas Cage, Nicolas Cage. I love this guy. I love his name. But take a look at this. I want to really acknowledge this. People who bought in 2022 will refinance into the 4% when rates drop this year. Good luck to the sideline buyers. So here's the thing that many people don't realize. If you bought in 2022, okay, you need something called equity to refinance. It's called LTV. It's a lending guideline, LTV. So the fact that people think that they can just refinance, you can't just refinance unless you have the equity. And rates aren't 4%. So this guy's guessing, oh, probably 4%, right? But if house value continues to go down, then you're trapped in your house without the ability to refinance into a lower rate. That's what I keep trying to scream to people. Look, like everyone that purchased in the peak in June 2022, say those people purchased at 6.5 rate. Say they were sold like, don't worry, guys, the interest rate's going to be 4% this year. It was actually ended in 7%, but they're probably getting told this. And I'm not knocking Nicolas Cage. A lot of people feel this way, right? So I'm just putting it up here to talk about it is all. Those people that purchased at the peak cannot refinance into lower rates because they're upside down. We have data now, Luke, and I didn't put this video out yet because I've been lagging, but we have according to Redfin, 1.1 on a national average. We're down year over year 1.1%. So again, the only way you can refinance is if you bring money to the table if you're upside down, right? And again, Nicholas, I appreciate that comment, brother. I'm not knocking you at all. I think it's important that we get stuff out here like this. Anything you want to add to that, my brother?
Is there penalties as well in the US when you refinance?
Well, there's penalties in the sense that you got to pay a whole bunch of fees.
Right.
So a refinance will cost you, depending on the rate, because the whole market's all messed up with pricing for the interest rates, but a
Hmm.
refinance costs you 2 to 3% rolled into the loan. So it may not cost you out
Right.
of
Okay.
pocket as long as you have the equity. If you don't have the equity, you have to pay the closing costs. You have to pay whatever you're upside down to meet the LTV threshold for lending requirements. And this is a very dangerous game to play. To purchase a home expecting that you can refinance later on in the year is not the best way to do things, because if that doesn't happen and doesn't come to fruition, then what? Do you guys see in the background?
Yeah.
I saw them running.
Yeah, I thought I heard something as
Really? I'm sorry.
No, it's good. It's good, man.
All right, let's
It's
see here.
real life.
Yeah, yeah. Let's see. Look at the. Okay, so Johnny threw. Okay, Johnny, I was on. Okay, I was on, and you were on as well. I was on Todd Sachs live yesterday. I just like
Oh,
hiding.
okay.
People are like, why aren't you on there, man? I like hiding in a corner and just being a fan, man. You know, like I'm a fan too, and I'm just like, yeah, guys, let's go. I like it, man. I like to walk away from the pressure of like being a content creator and just be like everyone else and like have fun and have a good time. But anyways, Johnny was on there. He's like, Travis, I'm writing offers for some houses you want to see. And I'm like, yeah, I want to see Johnny. I want to see bad. And he sends it over and he just sends me some Zillow. And Johnny, and I was like, Johnny, where's the market analysis? It's like, Johnny, where's my market analysis? And I'm like, you just sent me listings. How do I know if it's a good price? So, Johnny, Johnny's Johnny's getting a little fidgety. Johnny's getting a little fidgety. I love you, Johnny. But where are the market analysis? So I told Johnny, I'm like, dude, let me get 3 years worth of market analysis for the subdivision and for the area so that we understand whether or not that's a good deal. And case in point, Luke, I think that if people are purchasing right now, people need to do their market analysis, need to have their realtor do their market analysis for the last 4 years on the city and on the local subdivision. And they need to do a market analysis in the property subdivision for the last 4 years on rent. These things are very, very easy to do. Realtors get paid an astronomical amount of money sometimes, and these types of market
Yeah.
analysis only take a few minutes. So, that's what they should do. There's a little bit of recovery on the 10-year and the 2 year, but any thoughts on that?
Yeah, no, I think that's spot on. I think people should be doing a market analysis, and like our good friend Scott Walters says, check out the rent range. See what the rent ranges are for properties similar to the one you're buying. Can you rent it out? Because if you can't rent it out and you end up in some trouble, that's problems down the road. You don't want to be with the rest of people that might be in that situation too, forced onto the market.
Yeah, I saw them again behind there. So I wanted to talk about this. This is a CMA. That's a comparable market analysis, Luke. And
Hmm.
Moses is basically saying CMA everything. Now, a CMA is okay. CMA is good. CMA is more of a marketing tool. It gives agents an ability to do a listing presentation. And Moses, I want to clarify. There's a difference between a CMA and a market analysis. A CMA is good, but a CMA is usually only going to go back for 6 months. And the realtors have an option to go outside of the property subdivision to create a comparable market analysis. What we really need, Moses, is we need a bigger picture going back several years, whereas the CMA is only 6 months. We need an actual market analysis on every single sale for that year. And we need to know what the average home sold for, square footage, how big it was, median sales price for the last 4 years on the city and the subdivision. Now, CMA, again, you got to be careful with CMAs because people could kind of trick a little bit of the information in the CMA to sell. So, anyways, man, you got to be careful with that. But CMA is good, but not nearly as good as a market analysis. Okay, let's see what JB says. If you've got the equity, it might actually be a higher payment to refinance. I think a number of homeowners will forego refinancing due to the increased rates. What do you think about that, Luke?
Yeah, yeah, that sounds like it's going to be the case because rates have gotten so high, especially if you bought in 2021. You're looking at what, like triple the rate on a 30-year. But if you're talking about refinancing in the US, are you talking about adjustable rate mortgages? I'm taking it.
So, like, we have fixed rates here, right? So, um,
Yeah,
basically, like people, like right now, it doesn't make sense really to refinance your whole loan. But what people will do, Luke, is get a second mortgage or a HELOC to basically pay off any consumer debt or auto loans instead of
right.
restructuring their entire first mortgage. So, say their first mortgage, 500,000 at 2%. If you refinance that to cash out, you have to refinance that entire loan amount, which would be devastating. Your payment would probably shoot up, balloon up.
Yeah.
So a better strategy is often like a debt consolidation loan, but or a HELOC, home equity line of credit. But the problem with doing that, man, is back like in the past, you basically treat your house like an ATM machine, and you're rolling in consumer debt for the next 30 years. So it's I get the struggle though. It can make sense as far as monthly cash flow, right? Output. But the reality is, it's not always the best option to do that, right? Coming up with like a budget is a good option. So are you seeing any? What are your guys' interest rates out in Canada?
It's like 5.5%, and they don't do like a 30-year fixed mortgage. So we only have like the most popular mortgage product is a 5-year fixed. But having said that, over the past 3 years, the most well, not in 2022, but in 2020 and 2021, 2019, 2018, the most popular product was a variable rate mortgage. So those people are getting absolutely crushed right now by higher interest rates, and and a lot of them are screwed too because they're negative equity, so they can't refinance even into a 5-year fixed. And I think even financing into a 5-year fixed at this point is kind of dangerous because you're going to get hit with loads of fees if you want to try and refinance when rates come down. I do think rates will come down at some point, but for bad reasons. I just want
Yeah,
to affirm that.
yeah. It's what's amazing is that y'all don't have fixed rates. Like that's got to be so scary as a homeowner in Canada, not knowing like whenever it adjusts, right? Not knowing what your payment's going to go to. Like
Mm,
a lot of Americans, we're kind of spoiled in the fact that we have low fixed rates for 30 years. A lot of people don't
yeah.
realize that. That's kind of unique to the U.S. actually.
It is,
Um,
yeah. A lot of people in Canada would love to have that, and
and,
in the UK, where
and it's
I'm
not
from,
even an
it's even
option.
worse.
It's not even an option. Look,
No,
like
well, I mean, it is an option, but you're talking like 12.5% interest rate.
on a 30 G's. So
Yeah, so
I pulled Vital's comment up here again because I think. Okay, so let's go over this, Luke. What happened to the 2023 home price crash? Ain't happening unless everyone has all this unless it ain't happening in your area, Vital. That's what he's saying. It's like, why isn't it happening in my area? But let me read this question. Ain't happening unless you are in a high crime, high cost new build markets. So I would say that's pretty accurate so far. But I would, you respond to that first, Luke. I want to hear what you have to say.
yeah, I don't think there's going to be like a house price crash like we saw last year, this year. I think there's going to be a little bit of a rebound actually, because I think you've got all this money on the sidelines that's got to come out of the woodwork, get in the market so it can really get crushed in the recession. Because think about it, if you've got like millions and millions of buyers that are sat on the sidelines waiting, if everybody's just waiting for the opportunity for the market to crash and then they're going to buy, it's never going to crash. So you have to bleed that money into the market, unfortunately, and it is unfortunate because a lot of people get crushed. I don't say that lightly, but yeah, I don't think it's going to happen. I think when the recession really hits and unemployment really starts to spike, that's when things are going to really start to head south in the housing market.
Let me pull this up. They're talking about 40-year loans. I just wanted to reassure you guys that is not a 40-year loan. So that would take like rollbacks on the Dodd-Frank Wall Street Reform Act, 40-year mortgage. This has to do with loan modification, you guys. I just wanted to make that point. It is not a qualified mortgage, like normal lending. Now, as far as, that was also vital signs. I randomly picked in that comment. It's also vital. But here's what I would say. Um, obviously there's some money on the sidelines, but there's also a lot of money on the sidelines that's always been on the sidelines. The way I look at it is people have always
Mm,
wanted to buy a house. There are people that have more money than they did pre-COVID. There are more well-positioned buyers on the sidelines. But I still, as far as like what happens to the price crash, well, one is the Fed kind of keeps flip flopping a little bit on the interest rates. People still have money and are buying recklessly. But the thing is the prices are still crashing in those areas. It is spreading, but what I'm seeing happen, and this is just from my eyes, right? I'm seeing a temporary, call it a melt up, call it a boom up. I think it's a temporary thing because of the money on the sidelines. I think it's going to be kind of like the weak money, weak hands, right? Soft hands. People are going to get knocked off the perch. People are going to jump out of the bush, right? And they're going to go YOLO and they're going to buy. And I believe that it is possible that, this year the price crashing is a little bit slower than it was last year, because last year was historical. It was historical fashions. But I think what's going to happen, just like in 07, 08, Luke, is that's going to happen. It's going to continue. People are going to buy, and then it's going to completely explode. I'm sorry, it's going to completely implode. And all of the people that have decided to buy in that box of, post 2021, all of the risk goes to them. All of the bill goes to them because they still have that 30-year fixed rate mortgage. You know what I mean? Like, I can now, when the recession happens, if the housing market tanks, the unemployment increases, because I'm renting, I can now be mobile and go find a house with a good deal, possibly from someone that's distressed, and I can get a great deal. So it is uneven, but it's still overwhelmingly unaffordable. Prices are still crashing. It is an uneven spread. It's kind of following the unemployment right now, is the way I could best see it. It's following unemployment and new homes. I don't think that, is Phoenix a high crime area? Well, that's a high new build area, so that doesn't count. Boise is not really crime, is it? Is it a high crime area? There's not too much new building in Boise. There's a bit of new building, but different markets are behaving differently. And then when we look at Florida, Luke, there's some places with decent amount of new construction, unaffordable, a little bit high tech jobs, and it's still resilient. So we're seeing the
Hmm.
migration right now. We're seeing people escape one bubble, go to another area, creating an additional bubble. I think it's going to be. I think what we're seeing is it's going to be harder for the more affordable, the once more affordably or comparatively more affordable areas. It's going to be harder for them to experience price crashes, because it's like the unaffordability is everywhere. So when there's pockets of areas that are affordable to Californians or people from New York, say they come to Texas, they're going to flood in there and they're going to pay over value for those houses because they're used to $1 million houses. So someone from Southern California used to $1 million houses. They come to Texas. They're like, whoa, these houses are 350,000. No problem. I don't care. It's overpriced. So I think that the migration pattern is extremely important, as is the unemployment. However, the unaffordability is starting to catch up. Buyers are starting to reel it. We're starting to get stories of buyer's remorse. That box is starting to crumble. People are still flooding into that box. So I still think the price crash is here. I still think it's happening. Um, Obviously, I think that 10-year going down and the bank runs and the financial crisis is a huge warning on the fact that we should stop. I think that the Federal Reserve is giving us huge warnings. But Luke, some of these people just can't control themselves, man. Would you agree? And they're just buying. Would you agree?
Oh yeah, yeah, I totally agree. I mean, I live in a city called Calgary that was I say relatively affordable, but relatively affordable compared to the rest of Canada. It was still in a bubble, but just not in as large of a bubble as these other places. And we've seen a massive migration boom similar to Florida. But the funny thing is about that, and Alberta as well, there's been part of like the freedom because essentially they didn't have all the rules that other places had, kind of like the California movement to Texas. But the funny thing is about that, like unemployment has been rising here since June last year. And since June last year, migration has also been exploding here as well. And the people aren't bringing the jobs. Like the corporations, the amount of corporations that are getting incorporated here hasn't gone up. So these people, they're moving, in my mind, purely just to buy a house, to satisfy that FOMO. And I think you're seeing the same in certain areas in the US. I mean, I don't know Florida's economy, but I would be looking at what is the economy like in Florida, because I would imagine it's highly dependent on tourism. Tourism's like a massive thing there. That's the first thing that gets absolutely crushed in a recession. So if there's lots of people who are working in the tourism industry, or they're just working for a business that deals with the tourism industry. I mean, they could be an independent contractor, but most of the work they do is for Disney, Universal, whatever. And all I'm just basically trying to say is there's potential in all these areas to see massive declines because essentially the economy is so distorted, and I don't think that's what people kind of get. And I see that even here, people think, oh, the economy's much better now because of all the stimulus injections that we saw, when really, if you actually look at the unemployment rate, starting to go up again. So
Yeah. So this comment here, Luke, if interest rates drop again, which they have dropped, Rickless, and again,
yeah, they've dropped.
I appreciate this comment because I want to talk about everyone's angle for the most part, right? As long as there's love and respect, Luke, dude, we just sharpen each other, guys. You know, we just got to remain. And I know I need to work on this, man, especially with the realtors. I'm really sorry, realtors. So mad. But look at this question. If interest rates drop again, it's going to inflate sales prices. That would be enough for the equity for many 2022 buyers to refinance. This is a very dangerous thought process, in my opinion. I think it's very, very extremely dangerous. So I'm just going to pull up this chart right here. And this chart is basically the median sales price. All right, this is on average. If I really wanted to get, you know what, let's just go to San Jose real quick. Okay. So, and let's just look at the last 2 years. All right, take a look at this. Okay. So, first of all, what you have to understand again is in order to refinance, yes, you do need equity and it does cost money. So 2-3%. Now, look at San Jose. This is an extreme
Wow.
case, peaked at 1.6 million in San Jose. Okay. 1.6 million. So right now, average median sales price is 1.27 million, which means, oh my gosh, Orlando's here. I see you, Orlando. I'm going to bring Orlando in here in a minute, which means according to what Rickless is saying, again, Rickless, I understand this is very extreme, but house prices would have to go straight up like this, just straight up. And then, oh yeah, there's the equity again. And it would have to be enough equity to cover anyone that purchased in this pocket right here. This pocket, and they're upside down 300,000. So the demand would have to be so hot that it raised prices straight up to 300,000. Then, and then the rates are low. But the thing is, Luke, house prices went up like this because of 2%, not 4%, because of 2%.
Yeah.
So again, Rickless, I understand your point. Um,
What was Fed funds in June when the
yeah,
market started drifting negative? Like
yeah.
what was it? 1.25%, something like that.
I don't know, man. I mean, it's just really wild. Let me pull up this comment right here. I had and I'm gonna bring Orlando on here. Let's go back here. Orlando Miner,
Yo,
how are you,
what's
sir?
going on, man? You doing good yourself?
Nothing. Nothing. We hear you. We got Luke on here. We're all together.
What up, Luke? How are you?
Yeah, nice to see you, man.
You too, man.
So one of the things that Orlando really covered, kind of, in advance is the kind of the commercial mortgage banking crisis. So maybe we could talk about that. But let me throw this comment up here. I really appreciate the super chat. Appreciate that, man. The price crash is coming. Look at the price of food. Everyone has to eat. I do not think there is that much real money on the sidelines. If there was, why so much debt? They bring a good
True.
point. On one hand, people have more savings than normal, right? I think about 2 or 3 times. But on the other hand, that savings is being depleted rapidly. So even if rates are down, you know, the pace of well-qualified buyers has to keep that pace, and well-qualified buyers are taking a hit as well. A lot of people are losing savings. What do you think, Orlando?
Yeah, I mean, yeah, the price of food and stuff is going up, and people are definitely spending their savings. Um, Definitely, people are using credit, and I was talking about this on Todd's channel the other day. I think for me, the biggest catalyst is everyone using credit and this just tsunami of credit card debt that's gonna really hit a lot of Americans. And the thing is a lot of these credit card companies and are enticing people with this easy debt, and in their eyes, the interest rates being raised. I mean, it's just they're rubbing their hands together and they're saying, hey, look, this is a great opportunity for us to make as much money as we did as the previous years, and that's what they're doing. And it's when you have excess spending on one side and the Fed on the other side is saying, hey, we need to stop people from spending. You have just two ends of the spectrum here fighting against each other. So something has to give.
Do you want to add to that, Luke? As far as like, on one hand, they're trying to fight at the inflation, but like the other hand, the government's like fighting for higher inflation.
Yeah, no, I think you're right, Orlando. I heard you talking about that on Todd's channel last night, and I think you're totally spot on with that. The credit card debt, I think that's something to watch, and I think it's
Right.
also something that could impact smaller lenders in the future because this credit card debt is not going to get paid back. A lot of it is not going to get paid back at all.
Yeah, yeah, good point. So Orlando, if you can kind of, if you could talk to our viewers about, in just so many words, and maybe Luke, you could jump in as well because you both are way smarter than me, obviously. Maybe my background's almost as good as Orlando's. My hair's better than Orlando's at least. But
You're right. No hair,
um,
right?
if you can, Orlando, talk to the viewers about what's happening behind the scenes in commercial financing. I think you and I would both agree that there's a possible black swan right around the vent when it comes to specifically defaults in and vacancy rates in commercial. Will you touch on that? And then Luke, after, will you touch on what is happening in Canada, if you know, with commercial?
Yeah, there's a big issue with vacancy rates, and this comes in the form of office buildings, retail, and now just coming up, it's apartment buildings due to overbuilding, right? And also due to a lot of people not being able to afford the brand new rent that a lot of these owners are asking for. So what you're seeing is a lot of times these individuals who've owned these retail units or these office units, back when they got their loan, the values were great. There were no vacancies. But now that a lot of these companies are contracting and they're closing offices, closing retail locations, now you have these huge vacancies. And now as they come up back to this year and look to do a refinance, the values have been chopped in half. So now the companies have a choice to make. Do I go ahead and continue this loan and go ahead and drop a bunch of cash? Well, some of these individuals do have the cash, some like Blackstone or whatnot. But what about the smaller owners who have no cash, right? So what they end up doing is end up giving the property back to the bank. Now, what's interesting about that is that we're just starting to see the little small pieces of that happening, and we have a huge, I mean a huge amount of debt that has to be refinanced this year. And so we're looking around the August term is where the August timeline when a lot of these loans will become due. And it's my thought process and my opinion is that a lot of these guys are going to walk away and hand it back over to the banks. And the reason why I believe that is because a lot of these loans are non-recourse loans. And non-recourse means that there's no personal liability if they walk away or the loan fails. So they just hand back the keys to the bank and say, here you go. And what that means is a lot of these banks will have to either sell these properties at a default at a discount, which most will do, which means that they'll have to eat the bottom line on that.
Okay, very good. Luke, do you have a follow up on that?
Not really. I think you're spot on with that, Orlando, and I'm seeing the same thing here in Canada too. Like commercial office space is just so vacant. In the city I'm in, the vacancy rate is one of the highest in North America. I think it's over like
Wow.
36% or something like that. So you got all these offices that are sat empty, and I've been saying this since 2021 on my channel that I think commercial real estate could really be the black swan event to the financial system. And then you really have to think if the banks are having to sell these assets off at a big discount, well, are they really going to want to lend? And it's really that tight lending that really can cause a housing market crash, because if the banks aren't wanting to lend, then it's painful to get a loan. I know that from personal experience in the UK. We were trying to buy, well, we did end up buying, but we were getting an investment property in 2012 or 2013. And when we went to buy it, the bank wanted 50% down, and then they wanted my girlfriend's mother to sign on their house, which they owned outright, for an
Oh
investment
wow.
property. And we were just like, what the heck? And they were laughing at us as well. They were like, why would you want to buy this now? And we were buying it based off the Crossrail project that was coming through there, which is actually due to complete like this year, I think, but we've
Oh wow.
already sold it a couple of years ago. But the thing is that I want to outline about that situation is when the banks don't want to lend, it is so difficult to go out there and buy investment properties. And I think that's what people kind of don't understand. They think it's going to be easy, like when rates drop, even if they've got good credit. But the banks, they just don't want to get into those type of investments if they're taking huge losses on properties, commercial real estate that they're having to sell off. So that's interesting in Orlando, and I think that's
Yeah.
a great thing to explore in more detail, really, because I think that could be a huge black swan event.
Do you
Yeah.
guys go ahead, Orlando?
Uh, and also too, kind of going back to that, a lot of these the huge banks, I think there's a really good correlation that we spoke about earlier, which is if you take a look at the big four are really the guys who are really pushing and pumping a lot of this credit card debt out and whatnot. And look how insulated they are. It's really the smaller regional banks that really don't do a lot of credit cards. A lot of their assets and a lot of their income comes from depositors, and it comes from doing, loans, right? But you have the big four who are really pumping out all of this credit card debt, and they're making their money. And look how insulated they are from the situation that we're seeing right now with the fallout of the regional banks. So that should kind of show you exactly where we kind of stand here when it comes to this regional bank credit card debt scenario. And I think it's, a IOU right now when it comes to all of this credit card debt, how that's going to really play out when right now Americans can pay the minimum payment, right? And they have some money in savings. But what happens when it's all depleted?
Yeah, total catastrophe.
Right.
So I've thought. First of all, big shout out. Appreciate you, buddy. Thank you for the super chat. Look at this, man. I mean, this is amazing. As of today, all of my debt is paid off, and I have a down payment.
Good job.
Beautiful thing, man. I mean, and that's what that's what we should, in my opinion, you guys. That's what we should be doing when we're on the sidelines. Now, I've been doing that, but you know what I've also been doing, guys? I have been stressed out and frustrated, right? Even though my purchasing power is like exploding, right? My situation is much better because I've cut my expenses. I'm saving more money. My credit's better. I'm becoming an expert in like every area in my market. So I'm like really empowering myself. But yes, this is what we should be doing. So proud of you, man. Thank you for throwing that up there. You didn't have to do that super chat. Mad love to you. Thank you for doing what you're supposed to do, man. A lot of people don't do that. That's why we're special. We're just doing what we're supposed to be doing. Save your money,
Right.
take your time. The frustrating thing is it just appears people are getting lucky and reckless, and they're getting rewarded more than we are. So let me ask you guys, and let me throw this up here. We're going to take a look at the market real quick. Massive losses from Goldman Sachs and JP Morgan Chase. Obviously, there's a lot of unrealized business expenses. Let's go back over to the treasuries. Here's the 10-year. 10 years down still. Isn't this crazy, Orlando? 20 basis
Yeah,
points
it's
on the
nuts.
10-year. 2 years down, 38 basis points. It's signaling, probably some very bad things to come. Let's look at gold. Gold has rebounded, but has lost a little bit of the momentum. Oil is tanking, like Luke said here. Oil's down 4.26%. A lot of things happening. Can you guys talk about, and again, you guys, real quick, go to Orlando's channel. I'm going to plug your channel in a minute. But can you guys
Oh
talk
man, you good.
about lending restrictions? And here's a point that I've been trying to make, and it's kind of like the worst of two evils thing. I think lending restrictions would specifically, like tighter lending restrictions, would specifically target the housing market instead of like crushing the tech sector, unemployment's, banking collapse. If we, and hear me out, and I know how some people will be upset at me, but if we restricted lending standards, it's going to help. It's going to help right now. And that is what happened in 2009 through the Dodd-Frank Wall Street Reform and Consumer Protection Act. They
Right.
changed the entire lending standards. So those lending restrictions shut the industry down, and it was able to heal over a period of years. But how likely do you guys think it is? Starting with Luke, do you think, Luke, it's likely that lenders will, either through the government forcing them or on their own, will they start restricting more lending standards?
I mean, it really depends if they start taking losses. But if you look historically, actually, at banks and lending, anytime there's a recession, typically they don't want to lend. They're not as free with the money that they're lending out. So that is something really to note. And you can really dive back through history. I've done it before. And you can see that during these times where there's been recessions, that's actually been the main catalyst for banks, you know, asking for more on the loan applications or whatever they've got to do. I'm not sure about the regulations in the US, but can they, if you're in a certain industry, say, actually, we don't want to deal with that? Or is there certain rules that prevent them from setting people apart for different kind of nuanced reasons?
What do you think, Orlando? Do you think that they'll actually restrict?
Yeah, well, you're kind of on the money on that when it comes to the restricting. I mean, the news came out just yesterday that the Fed is looking to be tougher on banks, all the way up to that $250 billion mark. Basically mid-sized banks, and they want to basically go put back all the restrictions that the previous administration had took stripped away when it came to the Todd Frank stuff. So that and what that basically means is that mid-sized banks, small to mid-sized banks, would be forced to put a restriction on lending because they would need a certain quality of loans and assets to package things up and sell them on the secondary market or use them for assets to get money from the Federal Reserve. So if that does come to become truth and the Federal Reserve does do that, that news came out yesterday, then that will happen naturally by itself. But when it comes to a recession anyway, people are the banks will go ahead and restrict anyway, and that's one of the things that I've been saying is, guys, listen, you can wait on the sidelines and wait for your home and whatnot, but you have to make sure that you have everything in line, because when the time comes for you to buy, it's not going to be like it was 2 years ago or 6 months ago. When things get bad and prices come down, you can bet your dollar that every bank will have lending restrictions, no matter if it's debt to income, no matter if it's credit, no matter if it's the LTV. There's going to be restrictions, and everyone who could have got a loan 6 months ago or a year ago won't be able to do that now. So that's one thing that most of our listeners, our subscribers, your subscribers, they all should look at that and make sure that you have that emergency savings account, that you have that liquidity, because all of that stuff is going to be big. You don't think that a bank is going to say in a recession, you know what, we're going to need you to have double reserves during this recession. Of course they're going to say that, so you have to be prepared for that.
Very well said, sir. Very well said. I certainly hope they do. I think it would just make so much sense, Orlando, because, I mean, look at things are breaking apart already. And I don't know, it is what it is. So I just want to get your guys' opinion on this, Luke, Orlando. I had a question, and then I'm going to pull up another one. We got some really great comments from the viewers today. Just really, really appreciate it. All kinds of different opinions, different areas in the nation. This is how we come together. We come together, we talk about what people are
Right.
talking about. We do the best we can, and we can come together, whatever side of the coin we're on, because no one has that crystal ball. So let's go over the down payment. Luke, and I don't know if it's the same thing in Canada, but in the US, you can have as little as 3% down on Home Possible, Home Ready, conventional, normally 5%, FHA 3.5. But you could do, let's just talk about normal conventional, 5% down. The question is what should be the minimum down payment Now, a lot of people are saying 20% down because when you do 20% down, you eliminate something called PMI on conventional mortgages, which is private mortgage insurance. Now, my answer, and I want to get you guys' answer. Now, here's the thing. When I'm going to put a down payment down, I'm going to do 10% down and I'm going to pay all the PMI up front. The reason I'm going to do that is I want, well, first of all, I have no debt. I'm a well-positioned buyer. I have a whole bunch of money saved. Okay. Those are the most important things. I'm an expert in my local housing market. Okay. Those are the things that you do before talking, putting in offers. But I don't know, as long as someone's well prepared, I don't necessarily, it is very important that y'all understand what I'm saying. I don't necessarily think that 20% down payment is a requirement. Case in point, a house that I made a lot of money off of, my first house I bought in Texas, I bought with an FHA mortgage, 3.5% down. I made $150,000 on that house. If I would have waited for 20% down, I would have missed all the equity growth. But you have to understand too, when I did that, I was well positioned. So I think your down payment, the more you have down, the better probably. But if you're like me and you want to invest in real estate, I am choosing to a little bit in the loan and a lot of it in liquidity. And that's my premise there. What do you think? Starting with Luke, what do you think? Should people what should people be putting down? A lot of money, bare minimum. What are you thinking, Luke?
Yeah, in this environment, it's not going to hurt to put more down because essentially if the price does go down, and again, it depends on the type of loan as well that you're getting. You don't have as much interest rate risk or risk of having to refinance if you've got a 30-year loan as if you have a 5-year loan. Because here in Canada, if you're looking at possibly refinancing in 5 years and you're buying with 5% down, you could be upside down and in foreclosure in 5 years because you are far upside down. I think it does kind of grind my gears, but I don't like the government subsidized loan programs. They have them in Canada, they have them in the US, they inflate the markets. I mean, this is like exactly with the stimulus, you see the same thing that happens, but you've got to understand that if you're allowed to put 3.5% down, if the requirement was 20%, home prices are going to adjust for that. And then we've got all the risk of us, the taxpayer, carrying all those mortgage-backed securities that are now essentially rubber stamped by the government. So I think, like many countries around the world, it should be left to the free market to decide what down payment is required to get a home. And, prices are going to adjust for that. I think people get a little bit fearful that if the requirement was 20%, that it would be unaffordable for everybody, but prices would have to correct for that.
And Orlando, what about you, man?
Yeah, I think 10% is a good middle ground in that. I think 20% is a little on the extreme side. And I only say that because I see how hard it is for individuals to come up with 20% on the investing side. So, that's the number one question that I have for individuals who are looking to jump into investment property or commercial properties is I say, do you have the 20%? And that question eliminates almost 80, 90% of people.
Yep.
So I can only imagine what would happen, when it comes to a residential, someone primary home, that they can't come up with the 20%. And, that goes hand in hand with 68% of people are living paycheck to paycheck. They probably don't have 20%. That goes hand in hand with, most of people's, emergency savings account are 0 to nothing really, basically, So, yeah, and it's 10% for me is the middle ground before I ramble on.
Go ahead, Luke.
I have a question for you, Orlando, because we're seeing it a lot in Canada with these government-sponsored loans. There's a lot of people are committing fraud to get investment properties with a government-sponsored loan, and it's kind of become almost accepted as a way to get an investment property, even though it's totally illegal. And I just wondered if that's something you've seen, heard of in the US, if there's things that prevent that happening.
Are you talking about as saying that the property is your primary and then it's actually investment property?
Exactly, yeah.
Ah, okay. Yeah, that I mean, people do that, but the difference between I don't, at least I would think in the U.S. versus Canada is that it's actually allowed just so long you stay in the property for 1 year. Here in America, it
Oh,
is.
okay.
So you have to stay in the property for 1 year, and so long you do that, and then you move out, then you can rent it out and have the whole unit rented out. So that's the rule. But if you start off and you don't live in one side of it, then it's fraud.
Yeah.
Okay.
Occupancy fraud.
Hmm.
So here's a comment, and B, I think BRN, and then this is a great point. That's, and basically they're saying, like, Travis, most people aren't financially savvy. We should have a 20% down payment requirement. Now, this is a comment. That's a big difference, Travis. So many people putting down smaller down payments are doing it because they have no choice, not because they're well positioned like yourself. And that's accurate. That's accurate. But I was just saying,
It is.
that's why I said at first, like, well positioned, right? But and that goes back to lending restrictions. I'm just saying, for like well positioned, like what you guys should be right now, that are watching us, pretty well positioned. I want to pull up this comment because there's a lot of fear going on that has just kind of come up as a result, primarily of the money printing over the weekend, or the bailout over the weekend. And again, if you guys could try to answer this, I'll read this question. The question is what about inflation? The price of a house, and Vital Signs was saying something similar, but the price of a house may not go up, but it may not go down due to inflation in the dollar. So your money in the future will buy less next year. So wouldn't you be okay with buying a house? So their argument is, what if they stay sideways? Your money's going to be devalued next year. Should we just YOLO and buy a house right now? Orlando, will you start?
I my opinion is really simple. Is and I kind of mentioned this over on Todd's channel the other day. Is that you know if you buy a house right now and it's 20% overpriced, I mean, you're just losing right off the top. Like
I know. Yeah.
you're buying a overpriced home. And so I could never advise someone to overpay on a home and then know the conditions that we can go through, meaning you could lose that 20% or more, right? So if you go ahead and purchase a home right now, you just have to be aware. I'm not telling people, you can do what you want to do. You can buy a house if you want. It's your money. You can do whatever you want. But just be prepared that if the house, the housing market, you lose that 20% and you lose more, then, if just numbers wise, it doesn't make sense. Losing 20% and inflation right now is what? 6%. So what's the difference there? To me, that's a huge difference in losing that 20% versus, just sitting on the sidelines and waiting and possibly burning 6%. That's just my outlook. When you just look at the numbers, and I'm a big numbers guy, so the numbers just don't make sense.
Luke?
Yeah, I mean, I think the same thing, and I think there's kind of this narrative which is coming from the past because it used to be the case, like housing prices are correlated with inflation, and they are to a certain extent because they're correlated with wages. But I think it's mainly the incomes that you need to focus on when you're looking at home prices versus the wages. And when you have to think about a recession and what's going to happen with people's income, if you just average it out across everybody, it's going to go down. And that might not even be measured in the data because those people are unemployed. But if you average it out, it's going to go down. And the thing is right now, like, I mean, they've probably changed a lot since I bought them, but I've been buying 1 year treasuries. 1 year treasuries were paying like 4.5%, 5% at one point. I'm not sure what they're paying right now because yields have been so volatile this week. But you're essentially getting paid. You have very little risk in US Treasury. I mean, if the government collapses, we have bigger things to worry about. You can throw the rule book out the window. And I don't think that's going to happen because they've got the money printer right there, as they've proven before, from the Fed. So I think 1 year T-bills, that's a great opportunity. And probably in the US, you're in an even better position than we are in Canada, because when I buy those securities, I can't buy them within like a tax-free shelter. And I'm sure that in the US, you can even buy them within a tax-free shelter for a certain amount. You probably have the same
Right.
investment vehicles that we have.
Right.
Yeah. And back to that other question. Here's censorship. We're going back to the gold standard. All debts will be erased. Now is the time to buy a house. So I mean, that's a sentiment. It's, I know it frustrates me, but it's a sentiment out there, and a lot of, he's not the only one that thinks that. So I think it's, that's why I really wanted to put it up. I mean, censorship. I mean, you got to be careful, brother, because the thing is it's a different market. This is extremely dangerous. The houses are already overinflated. They're already squeezed to the max. I understand debanking. I understand gold standard. I like all of that. But the other thing that we're not talking about is, back to the other question, you could be trapped in the house. You could be trapped without an ability to move for several years. So, maybe something, instead of buying an overpriced house, and just hear me out, like what Luke said, hedge the inflation by buying 1 year, 6 month, or whatever treasuries. Put it in a high yielding savings account to offset the inflation, right? Instead of jumping in and chaining yourself. That's just, and this is just all of our opinions, right? This is all of our opinions. I
Right.
don't want to act like we know everything, but the fact remains, guys, is these houses are super overpriced. And when the market continues to fall apart, again, I think the recent owners of houses are going to be paying the price for that. But these people's concerns are additional bailing out, additional money printing. So we can't blame. And look at the joke, you guys. Look at the lies. Look at right in our face, printing billions. Do you blame people for wanting to, like, let's just go back to gold? Let's use YOLO in houses while we still can, because everything is falling apart. Can you guys really blame people for feeling this way?
No, you can't. But one thing that I really, really want to stress is that there's this, and it's more intense now, right? That at this exact current moment, it's way more intense than it was a month ago, right? Is this FOMO, right? So everyone right now, because it's getting now nice outside, winter is over, we're going to spring. Everybody knows that, it's house hunting season. And then this big event happened with the banks, and everybody that's sitting on the sidelines has money in their pocket, and it's burning a hole in their pocket. They want to spend it and get involved in that new home buying process, getting that new house. They want to get into it, right? And with the banks failing and those regional banks failing, in their mind, they're thinking to themselves, this is the perfect opportunity for me to get rid of this money and get that new house, right? Because there's something in my mind that is saying, don't trust the banking system, and I would be better off just go ahead and overpaying and saying, forget this. I'm done with this housing market. I'll go ahead and overpay for it. But see, this is the thing that we've been talking about across everybody's channel, is you have to be patient. In times like this that's going on right now, Travis has been talking about black swan events and all this other stuff that could happen. This is when patience really, really pays off, versus you breaking and falling into the pressures of, this pebble, or this hump, or this trouble or trial that we're kind of going through right now. And here's the thing. We've all been telling you that something like this is going to happen. We just say this exact thing because we don't have a crystal ball. But we did tell you that this is going to be turbulent, right? You're going to go through this, and it's going to be, a situation where you're going to have to exercise patience and say, you know what, I'm going to hold off. The numbers don't make sense. And I fall back on that every single time. If the numbers don't make sense, why do it? It's really that simple. If the numbers don't make sense, why even, don't even get involved.
I know. Luke, follow up to that?
Yeah, I think you're so spot on, Orlando, especially with the FOMO coming back. And, when I think about investment choices that I've made, the easiest ones that I've made, like when I'm essentially just looking at my emotions and I'm following my emotions, those are the ones that have served me the poorest. in my life. It's
Right.
been the
Yeah.
decisions where I've wanted, like right now, I can totally sympathize with people who are on the
Mm-hmm.
sidelines and they want to buy, and I totally can get into that mindset and understand, because if I was living here right now, I would be thinking the exact same thing. And it's like Orlando said, patience, because it is going to be tough. It's not easy. It's not always easy to sit on the sidelines, especially when you've got so many sellers that are going to be in denial right now. But, you know, when you look at the bubble chart and how bubbles go up and
Yeah.
down, there's different phases, and that the phase after it peaks is called the denial phase. And that is exactly what we're in right now. And you just don't want to get trapped in that bull trap phase, which could be happening right now. So I think there's a lot of FOMO. And I think the industry as well does not help, because the industry has so much money. They get paid so much money that they have all these huge budgets still from 2021 and 2020 to go out there and market themselves. I mean, when I look around and we drive around and go places, all we see is advertisements for real estate agents and real estate brokerages. So you're constantly being bombarded with this real estate, real estate, real estate. And now, even on YouTube, which used to be like more community spaces, you're now seeing tons of realtors flock to it for lead generation, which you talk about on your channel a lot, Travis. So I think, yeah, it's easy to get into that mindset. And when it's difficult like this, you kind of have to sort of get excited about that, because that means you're doing the right thing. Even though it's not what you, if you're doing, if you feel like you're doing the wrong thing emotionally and you're not following your emotions, then you should probably be patting yourself on the back, because you're probably doing the right thing.
And my here's my thing is, what is patience without having a difficult event to be patient about? Like, like it's just it
Yeah.
doesn't make sense at all. So it's super important, guys.
Do you guys see? So this is a comment to the viewers. You guys see why I love these men so much? You know, both of them very successful in real estate, and they're still human beings. They're still like, you guys. Listen, the numbers don't make sense, and I really appreciate you, you know, Orlando, Luke, because, and I'm throwing up a lot of stuff from Vital, you guys, because I feel like he's a friend of the community and he's struggling, and you know, I think it's important to talk about these insecurities because we don't have that crystal ball. We're going off of history. We're going off of
Hmm.
experience. We're going off of their inversion of yields, the massive bubble. But you know, people want to see it in their backyard, and the emotion is strong. The emotion when it comes to buying houses is just so strong, and you know, and I feel bad. But take a look at this. Well, let's. I'm going to go back to you, Vital, in a minute. But take a look at our market. Let me update you guys real quick on the market. Let me zoom in real quick. Luke, we got oil down. Oops. Okay, so we got oil down
5%,
almost five
Mike.
percent. So oil's down almost 5%. Gold's only up about 0.93, so it's not a huge, not a huge increase yet in gold. Market's down considerably across the board. Let's take a look at the 10-year. 10-year still down 20 bips. Let's take a look at the.
This market is crazy, man. I tell
This
you
is
what.
insane, man. This
Just
is insane.
yesterday,
Insane,
wasn't
man.
everything green? Like,
This is just so
Yeah.
crazy. Um, I mean, it looks like a collapse, man. I mean, it looks like a massive collapse is happening. That, you know, looks like a black swan type of situation. I mean, this is crazy. But take a look at this, Orlando. And again, um, I don't want to just take the easy questions, right? I don't. I want
yeah.
to take hard questions. I want to take a little bit of insecurity, a little bit of the fear, and talk about it here in our community where people are safe to ask these types of questions, and we share our opinions. So I'm going to divert to you, Orlando, because you're in commercial. That's your
Right.
career. You're
Right.
licensed in commercial. You see behind the scenes. So you know, I'm a little bit bold when I talk sometimes. Vital is concerned. First of all, what Vital is saying is, I'm scared that my housing market's not going to crash and I'm going to be stuck renting my whole life. That's
Okay.
what he's saying here. But nonetheless, though, commercial real estate, like I said, like you said, from the stuff that I'm looking at, it appears the vacancy rate is skyrocketing. Uh, Prices were down 13% last time I looked. Inventory was flooded. People can't fully rent out the commercial residential. Will you go into his concerns briefly, Orlando? I'm giving Vital a lot
Yeah,
of screen
yeah,
time
yeah.
because
Yeah.
the insecurity is important, man.
Here's the thing. I get him saying that, there's no crash, but look, I speak to I speak to commercial guys, residential guys every single day. I see the market. I'm in commercial real estate. I own a bunch of apartment complexes. And look, I can tell you right now, from everybody I've spoken to, everybody's number one concern is how are we going to get all of this office filled? How are we going to get up these vacancy rates? They're super sky high in office and retail. And then, the commercial industry baby, which is apartments, right? We haven't seen this much vacancy in apartments it's been forever, And what's happening in the commercial realm when it comes to the A-type properties, which is multifamily, is LTVs are dropping because it's not so much of a guarantee now that you will be able to fill all of these apartment complexes. And what everybody wants, I just went to a conference, a week ago. Wells Fargo, Chase, all of these guys, right? All the regional banks. You know what everybody was talking about? Yeah. Everybody was talking about, we want the Fed to cut rates. We need him to do whatever he possibly can do to cut rates. He's hurting mortgage demand. He's hurting the commercial industry when it comes to refinances. A lot of times, and I'm not going to get really too deep into this because it's a lot of technical stuff. But the point is interest rates, no matter if people believe it or not, is different than it is on the commercial side. The interest rates truly do affect what the value of properties are. If interest rates are right now, let's just make this really simple. If interest rates are at 7%, right, and I have a cap rate of 5%, I lost already. There's no money for me to make. So if someone in California is selling a 5% cap rate office building, I need that interest rate to be at 3 or 4. You can't make any money. You can't make any money. So for someone to say like it's not crashing or that's not what I'm seeing over here, and I am in the field. Yeah. I'm in the field. I am seeing owners struggle. I'm seeing owners try to figure out ways to get out of loans. I'm seeing owners give back loans to banks. So yeah, that's what I'm seeing.
Yeah, and I really appreciate you taking the time to explain that. I know it could be frustrating, Orlando, but these people are really our friends, man. They're really our friends.
Look, I'm sorry, I didn't mean to cut you off, Travis, but it doesn't bother me. It does. I actually prefer, if you're going to give me a chance to talk about real estate, especially commercial real estate, I'm going to talk about it.
Yeah. Hey, and Luke, I got a comment. Thank you so much, Tony, for that super chat. That $10, man, means a lot to me. I really appreciate that. I mean, I'll start crying, man. It's not even about the money. It's just about the support. It means that what we're talking about matters to a lot of people, even if they don't agree with everything. So I want to start crying like a little girl. You guys know how emotional I get. Is that alpha? Look at it. Okay, good. I mean, I started, his hair was just straight up 30 seconds, 60 seconds before I started. Anyways, you know how embarrassing that is, man? I'm like, oh, hi, alfalfa. I thought you were a 4-year-old man. But anyways, so this is a comment. This person paid money man, to say this to you guys. So great crap, Travis. Thank you. And Luke's an astute student of real estate psychology. Big shout out to you, Luke. Orlando's industry info is priceless. Big shout out, Orlando. Time to roll over my T-bells as I wait on the sidelines. I mean, instead of, Tony jumping in to purchase a house, fear of missing out, they're going to hedge against inflation with the treasuries, or even a high yield savings account works. So there's a lot of alternatives. Go ahead, Luke, go ahead.
And you're getting paid literally to do nothing. Yeah. You don't have to deal with tenants. There's nothing going on. You're getting like literally 4.5%, 5% to do nothing but wait on the sidelines. When in the past 20 years have we had returns like this? You're talking before 2008. So congratulations to you, Tony.
And I want to add, and I forgot I didn't mention this, is that as a owner myself, previously before, with apartment buildings, you didn't really have to do any negotiating with tenants. It was, hey, this is the rent and you will pay it because there's 4 people behind you that will rent it for that, right? Now it's, oh, negotiating. Oh, I'm telling my property management, yeah, don't raise any rent on this guy. Like, just don't rock the boat. Just let him stay all the way through. No. There's nobody behind him anymore. There's nobody that's gonna pay $200 more or whatever, right? There's none of that anymore.
Yeah.
And I'm telling you that personally, that I see it. Hey, don't raise rent. And I'm telling investors, I said, are you crazy? You're gonna go to a tenant after his lease is ending, and you're gonna say, I'm gonna raise the rent on you $200. They're gonna go, okay, no problem. I'm gonna go to the next guy, and he's gonna give me $100 less than what you're doing, $200 less than I'm currently paying. It's nuts. It's nuts.
I love it. See, these guys are a wealth of. I told you guys you're way smarter than me. I'm just kind of like the stupid person in the bunch that I just maybe my
No,
hair's
that's
better
not
than
true,
everyone, and
man.
that's why I don't
That's
know.
not
Maybe
true.
my beard is better. But what's up with the white patches? Do y'all? Is anyone that get white hair? Does it start in blotches? Why isn't it more spread? Anyways, I hate these patches of white. I have like a white black hole. Anyways,
You need to get the dye on the go.
I'm not going to do the dye. I will not do that. I won't do any cosmetic surgery. I am who I am, man. I don't want to hide who I am. But you guys, real quick to the viewers, do us a favor. You guys go to Orlando's page right now. Orlando Miner, here it is. Subscribe to his page. Check out a lot of stuff. This is one of the good guys. He genuinely cares. Plus, he's also, someone in the business. And when you're done going to Orlando Miner's page, you guys, please do me a favor
It's
for
so
your boy.
funny.
Also, go to my boy Market Mania. This is Luke's page. These guys are absolute jewels. Again, you don't have to agree with everything. I agree with almost a lot, but it's just good stuff, you guys. It's clean info. It is our opinions. So here we got another one here. Good question. Let me reverse this real quick. So, good question from Kelly. Shout out to Kelly. They've been with us also from the beginning. You see my lights going out in the background. I hate that. But investors snatch up so much affordable housing the last few years. Luke, you probably know this as well, but the investor shares over the last 3 years have skyrocketed, and most of the investment purchases have unfortunately been in affordable housing areas where
Mm-hmm.
those houses would have usually gone to first-time home buyers, maybe a little bit more affordable. So instead of it going to first-time home buyers, a lot of it can go to investors, snatching that up, driving prices up, eliminating obviously inventory. Can you touch on that, Luke? Do you see investor share like that out in Canada?
Yeah, I mean, the investors at the end of the day are backed by capital. And who's going to back like a company that is only going to be able to generate like 4-5% when you can go to a T-bill, a 1-year T-bill, and get 4.5%? And this is the thing that I think back in 2020 and 2021, it was totally different because rates got dropped so low. Everybody went out and was buying all the affordable housing stock because they were just looking for some sort of return. That's why all these pension funds were getting in there. And instead of blaming the pension funds directly, we should actually be blaming the Fed because they were the ones who actually started that party and forced them out on the risk curve. So these pension funds are just getting into more and more risky stuff, investing in real estate and things like that now. But I think that really you got to look and think that the capital behind that we already know is starting to be withdrawn. We've seen it with Blackstone. So, the fundamentals of these institutions coming along and buying up all the real estate is falling apart really quick. And it's actually going to turn into the flip side of that, which is they're going to have to start selling all their holdings into the market, probably at the worst time, let's face it. And again, these people, they're not emotional. They don't care. They will liquidate a whole subdivision just like that, and they'll make the decision. I mean, one guy I follow called Alfonso Picatello, he does great podcasts, fantastic guy, you can look him up. But he talks about this a lot because he used to work for one of these firms that was doing these things. And he's been asked that question many times about investors in the housing market. And he said, look, when it comes down to it, they're just looking for yield. And if they can find yield somewhere else, they're going to just dump it just like that and move on. So I think that could also be a bearish case for the housing market. And it's something I've said the whole time. I've said investors getting into the housing market in droves is not a good thing. You're turning it into the stock market. And look at the stock market. You know, the stock market goes down 30, 40, 50% sometimes in bear markets. So it's not going to be stable. That I don't think looking at investors is any form of stability in the housing market.
Orlando, do you think that the investor demand was a problem in the last 3 years?
Oh yeah, for sure. And a lot of that is really stoked in from how cheap the money was. A lot of guys like Blackstone and these hedge funds that they lend at they're borrowing money at a real big big stage here, and when they can borrow $500 billion at 3, 4, 5%, and they still have that money, right? So for them, they're just like, yeah, we're gonna go ahead and use this capital and buy up assets, and the asset just so happened to be affordable housing. And yeah, it's a really big issue. And like Luke said, these guys have zero emotion when it comes to
Yeah.
selling. They have no strings attached to themselves personally. They'll sell at a loss and then keep it moving, and go to the next thing. So and they're gonna sell, and let's be real, like Luke said, it's gonna be at the worst case, at the worst time that they sell. But like you said, they have no emotion. They don't really care. They'll sell it when they have to sell it. Look at Blackstone. They're just like, yeah, we'll get rid of it, no problem. We'll give it back to the bank. And a lot of these guys have already made their money in cash flow. In their eyes, they're like, oh yeah, we've made our money in cash flow. We don't really care about the the appreciation portion of it. So yeah, I 100% know that investors have really messed up the affordable housing
Yeah, and hopefully we'll
market.
start, as they have to, August comes, they have to refinance probably into
Right.
much higher rates. Hopefully around August, hopefully we'll start seeing some investors liquidate, okay, we'll just say sell their homes for under market value, right?
Right.
That's what
Right.
we hope to see. Maybe that flood starts happening in August. We have another super chat from my man. He is just throwing up super chats, brother. Thank you so much. Here's his comment. Powell cannot cut rates. It's the sin we pay for years of low interest rates, essentially fake success. In my opinion, you guys are the professionals. Bottom of my heart, again, brother,
Oh,
we
I
really
appreciate
appreciate
that.
your support. It means a lot to us. Let's talk. So let's start with Luke. And let's just be brief. We have some other good stuff here, and I'm way far back on the comments. But Luke, in what case does the Fed start cutting rates right now? Let's just play devil's advocate. Let's play devil's advocate.
Hmm.
What happens right now to force the Fed to pivot?
If the monetary system really starts to break apart, that's one of their goals is stability in the monetary system. So if that starts falling apart, they could be forced to pivot. They could start doing QE at higher rates. I mean, they're essentially doing it right now. So they could not put down the interest rates, but they could start doing QE. But I wouldn't have any faith in these central planners if I was you. I'm with you though. I don't want them to cut rates, but I understand that these people. I mean, Powell has pivoted before. He did in 2018. He started cutting rates, I think it was. So this guy has constantly gone back and forth. So I think we'll just have to wait and see. But I think it's really like if the credit markets freeze, if the monetary system starts to fall apart, then yeah, they will probably likely come in and start cutting rates. However, does that mean we go to zero? That's really the question. We might not get down that far. It might just be down to 3%, whatever, and then inflation goes up again and you're off again higher. I think we're in a bigger cycle of higher rates with higher lows, sorry. So higher lows and higher highs in interest rates for the next 30 years.
Orlando, in what situation would it have to go down right now for the Fed to do a U-turn tomorrow?
Yeah, I agree with Luke there on the monetary policy. If let's just say more banks and stuff would fail, and that quote unquote contagion spreads, right? and we start to see a bunch of banks having a very hard time, and even with the help that they currently have, it's just not enough. Then the Fed, I believe, would make a U-turn and say, I'm not going to raise rates, especially this Fed. I like to say this Fed is not he's not on an extreme on either side. He's a fence rider, like he wants to solve everyone's problem, but he also doesn't want to have the finger pointed at him and say you're the cause of XYZ. So he's gonna make sure he rides the fence on pretty much everything. And so yeah, I think that's what would happen if for him to make a U-turn. It would just have to all kind of collapse the banking system in particularly.
Okay, fair. We got a question from Cindy up here. I think this is a very good question. It's a consumer-related question. And this is Cindy, basically, and Cindy, love you. Thank you for all the support over the last
Yes,
few
I
months.
appreciate Cindy. She's on my channel too.
Love Cindy. We want to relocate and purchase a home in 2024. When should we start to work with a realtor? And my thing is you should start right now. I think you should start right now because you're probably going to have to go through like 10 before you'll find someone that's great. And Cindy, you'll know the difference. And I think that you should start trying to find one right now, well ahead of schedule, not at the last minute. And you should start having them do work for you. That should be, in my opinion, your way that you're interviewing realtors. Have them do the market analysis for the last 4 years in the city that you want to buy, and also in the subdivision, because remember, it's hyper local. So we want city, we want subdivision. So Cindy, I would say start working with them now. Do either of you object to that?
No, I mean, on my channel, we bag on realtors a lot, and people think that I don't like realtors, and that's not the case. I just don't like the bad ones. You know what I mean? And there's a ton of bad ones, especially with the way that the market was going. A lot of these guys jumped in and had like none. I'm talking about a guy was a welder the month before he became a realtor, and I know everybody's like, oh, Orlando, they got to start somewhere. And I'm like, yeah, but like, I mean, I don't know about you guys, but if I'm trying to sell my family's home, I don't want to hire a guy that has zero experience in selling real estate. I mean, that's just me. You can go ahead and do it, but I would not want that. It's like, would you hire an HVAC guy that has never done HVAC and he's your first person? I would want that, so my thing is just make sure that you go out and vet these realtors and make sure that they're the right one for you, that they have experience, that you can actually see, deals that they've sold, closed, for help other people do purchases. Just make sure that you find an experienced realtor.
Yeah, for sure. Do you want to add anything, or you want to, Luke? You know what? Let me get you to do this question, Luke. All right, this one for Luke right here. It's a good one, boy. It's a good one. All right. Does anyone else, think that regional bank failures were expected and planned by the Federal Reserve? Because how could they not know about this and do all this over the weekend? Like, oh my God, how do you not realize that they're being investigated the entire time? Luke, do you think? Put the tinfoil hat on, Put it on, but don't get that alfalfa hair. Like I had that spike in my hair and my great patches of beard. All right, I'm just going to rock it. I don't even care. I'm shameless, you guys. Doing videos makes you shameless. I'm super conceited, so that was a roller coaster ride of emotion for me. What do you think, Luke? Do you think that there's a little bit of foul play here?
It's hard to say. I mean, I doubt they knew the exact specifics of the circumstances that were going to occur last week and on the weekend. But then again, they should have known that raising rates to these levels with the debt levels that we have is going to break something. I mean, I saw the other day that essentially at the debt levels in the US that are current, it's essentially the same as 20% interest rates were when they peaked out in the 80s, I think it was 1981, something like that, 1980. So I think they're naive if they just sat there thinking nothing's going to happen. The economy is great. I just don't believe them when they say that. And I think we all know. I mean, Todd put out a great video analysis of the Fed's meeting, and I was also watching that too. And the Fed just doesn't want to come right out and say, yeah, I want to push the unemployment up. I want businesses to fail. And that's essentially what they want to do. And they want, because if you're pushing the unemployment rate up, what are you doing? You are crushing businesses as well, especially the smaller businesses. And some businesses are going to go bankrupt on the back of that. And poorly managed businesses like these banks, I don't think they knew the exact circumstances that were going to occur, but they sure must have been expecting something. And if they weren't, then they are stupider than even I can imagine that they are, which I just don't think that's the case. I mean, what they got, something like 108 PhDs or something at the Fed?
That's what they say. What do you,
Yeah.
what do you think, Orlando? Do you think that the Fed kind of saw that coming? They want people out of regional into the big four, maybe push for centralized digital currency. I mean, what do you think here?
Nah, I don't think that they knew specifically, like just like Luke said, but I could tell you who did know, SVB. They knew they knew what was going on, and that's and their tell was, their CEO pulling, all of his money out, going to zero 2 weeks before. And then a week later, after he pulled the money out, telling everyone, oh yeah, everything's fine. And so, the really, and this is the truth, to really show people that the Fed doesn't have, these quote unquote conspiracy theories of them pushing them into the big four or whatnot. They need to hold people accountable. And if you see this happening with SVB and their CEO doing that, isn't that insider trading? Shouldn't an investigation be done? And shouldn't he, go to jail or some consequences here? And if you don't do that, then this is how all of this stuff kind of runs rampant, and people say, oh, you guys were all in it together, blah, 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 blah. When you don't hold people accountable, but yet you're going to bail everybody out. That's the contradictory part of this whole scenario. So, it's really weird, and these guys, there's no reason why you should have let that guy go down to zero. Because think about it, the guy goes and he cashes out and he goes down to zero. That means he doesn't own anything. Why would anyone go down to zero of a owner of the bank? Like, it just makes no sense. Like, obviously he knew something was going on, and then he lied to everybody so that they could continue to clean up. So yeah.
Yeah. So, okay, we got another super chat. Thank you, BRN. I see you have a few comments. Appreciate your engagement, man. The Fed cannot cut rates right now unless there's an overall crash of assets before their meeting next week, which there won't be. Love you guys. BRN, appreciate that.
Appreciate that.
So will you guys stay on course with what he's saying? Luke, you should know a little bit about this. I mean, you study what's going on here a lot. What do you think is going to happen on the 22nd? Okay, Fed's going to meet 21st to talk, and then the 22nd they're going to decide on whether or not to raise interest rates. I believe prior to the weekend it was going to be 50 basis points. That's what I thought prior to the weekend.
Mm-hmm.
I now believe it's going to be a quarter because of the banking crisis. What do you think, Luke? What's going to happen on the 22nd?
Yeah, I think a quarter too, and I think Powell is kind of in this credibility phase where he's trying to regain credibility. So he's going to go ahead and hike the rates, but unless we have a massive correction in the stock market or something like I'm talking massive, and that can happen because I mean we just had moves that we haven't seen since Black Monday in 1987 in the bond market, and the S&P dropped 30% on Black Monday. So anything's possible right now with what's going on in the bond market, which I kind of see as the foundation below the stock market. So if that's crumbling and falling apart, I don't care where the stock market's going, but I'm looking at that foundation piece. And I really think the bond market is something to look at as well, because that often tells you what the Fed is going to do at their next meeting. And I would think that they're probably going to go 25 basis points. And then they're probably going to remain and say that, oh, yeah, we're probably going to do more hikes and everything like that, especially since core CPI came in hotter than expected yesterday as well. And owner's equivalent rents, which they're looking at, is still trending higher, and there's a big lag in that data. for the Fed. So even if rents were coming down really, really fast, which they are in some places, it's not going to be reflected in the data that quickly.
Orlando, what's
Yeah,
going to happen?
yeah, 25, basis points, and the reason why I say this is that, like I said, the Fed is gonna try to, appeal to those individuals that says, hey, look, you broke something in the, through this whole system with the banking market, and you caused the collapse of that regional bank and whatnot. So can you please stop raising rates? And then on the other side, he's going to be appealing to individuals that said, hey, I thought you were trying to fight inflation. And for him to really stay focused on to help both of those sides, he's going to cut it right down the middle and do 25 basis points. At first, it was 50, right? But then when the whole banking thing happened, he's going to be right down the middle, in my opinion.
Okay. Yeah. Good stuff. Good stuff. Little bit of market. Oil's down, obviously. Luke, it's 4.77. Luke called that as soon as he got on here. It's like oil's crashing, Travis. 10 years still down, a little less than 20 basis points, 19 basis points. 2 years down as well. Future, or I'm sorry, let me see. Where is that? Okay. Again, oil. Let's go
44.
back and see
Wow.
what gold is. Gold's still up a little bit less than 1%.
Hmm.
Dow's down, S&P's down, Nasdaq's down, and it's really amazing if you think about how the bond market. I mean, the bond market is crashing. Generally, the stock market should rally, right? Generally, the stock market generally goes up, but it's two separate things, and it's really
Mm.
interesting to see the bond market just crash and then the stock market do a similar action. VIX, someone said that we've never had a recession without VIX being at $40. Right now it's at, let me show you guys real quick. See where we're at real quick. Volatility index. Geez, did you guys see this? It's up
Yeah, I saw
16.43%
that.
today. Holy smokes. So
Yeah, if you pull that chart out as well, Travis, I think it's near like the highs for this year.
let's
Mm,
go 1 year. Close. It was higher in end of 2022 when interest rates were the highest. So
Oh
mm.
we,
yeah, yeah. I mean this year, 2023, it's like
oh
the
yeah.
highest we've been. So
Year to date, yeah.
Mm,
Let me see. Yeah, it's the highest it's been all year.
right.
It's been skyrocketing upward. I mean, the bank collapse, right? I mean,
Yeah, that really knocked it home.
so I think we've been talking for quite some time, you guys. I'm gonna start ending this real quick. Let me see if there's any other comments to throw up here. But before we
And
go ahead, yeah, go ahead.
yeah, and I do want to say one thing. I think that the Fed should do more than that. I think this Fed is doing. He's just, I keep saying it in my videos. He's just, a little here, a little there. He's trying to do this thing where he's like, I'm only going to do a little bit and then I'm going to see what the data says. I'm only going to do a little bit, then say, and he's extending this entire thing by just doing a little bit here, a little bit there. Then he comes back and says, hey, I didn't do enough. I knew back then I should have been doing more. So we're going to do it more frequently. I think he should just do more, but it is what it is. I mean, I'm not the Fed, and he's gonna go ahead and do it the way he wants to do it. But this Fed is gonna be extremely cautious, and in my opinion, the reason why is he just doesn't want people to point the finger at him and say, you're the one who caused us to be in this recession. You're the one. Like he doesn't want that. He doesn't want that finger pointed at him, and yeah.
All right. Well, it says some of the market. I don't think it's pricing in a zero yet. I think it's still a quarter. Let me throw this up here real quick. Obviously, we all think that the Fed should do more. At least everyone that's talking right now. Question on new construction: still better to hold off for now. When would it be the best time to start looking to get the best deal? I'm just going to go back into QView. Thank you for the question. You need to become really an expert in your local housing market. So you got to get with a realtor, or if you have access to live MLS data, do it. Do your market analysis on the area for the last 4 years. See if the house is overvalued or not. Because even if prices are cut 50,000, it doesn't mean the home is necessarily under market value. So you need more information to answer that question. But overall, I think we need to have our confirmed recession, and I think we need to have a full Fed pivot before most of us, it starts being a good time to buy again. I think we got to go through that because odds are usually when we have a confirmed recession, when the Fed does pivot, the market still does bad for a while. But again, things are different this time, so we want to be cautious as well. But just playing the odds here, playing history here. Overall, I don't think necessarily people should be buying until we have the confirmed recession, that fear, and the Fed pivot. Before that, I just think it's just so dangerous, man. I just think it's so dangerous. Let me see if I get another good question here.
And
All right.
they're pricing in 51.7% for a 25 basis point hike, but yesterday it was 78.2% for 25 basis point.
So it's going down.
Drop.
Okay.
But it could go up towards the end of the week.
That's crazy.
It's all over the place.
Are you talking about for them believing that he's going to do 25 basis points?
Yeah, Fed funds futures.
See, this is my problem, man. And this is the problem I have with the stock market is, a lot of these guys that you and this is the truth is a lot of these guys you see on CNBC. These are hedge fund guys. These are big bankers. They're all financial guys, and I can tell you just with hanging out with financial guys, financial guys they want what's best for them, right? And so, a lot of these guys are saying, "Oh, I'm hoping he doesn't, up it by 25 basis points." I'm telling you, I went to this conference and everybody wants him to cut rates. So that's the sentiment you're gonna get when you turn on CNBC or Bloomberg and you hear these guys talking about, well, I don't think that he's gonna do it, because they want to push everybody's opinion onto the side that hopefully the Fed will feel pressure from the public and then from the business side and not raise rates and actually cut rates. But if I tell you what, if this Fed cuts rates, man, it's going to be worse. It's going to be like, just imagine. It's going to be crazy town.
I did a video yesterday. It gave me a migraine, dude. It took me 48 hours of just thinking, like, okay, what if the Fed U-turns right now and starts cutting rates? Obviously, hyperinflation. Okay.
Yeah.
Obviously, if they cut rates right now, everything's going to be hyperinflated, leading to a depression. So I did that, basically comparing, like, hey, anyone that's buying now is going to fill up that box, that post 2021 box of people that are mostly shackled to their house. It's just so hard to know what's going on when we have to kind of base our opinions off of a Fed that's flip-flopping like crazy and basically lying. It's like, oh, you just did your job, Fed, but let's bail them out. Like, like what is going on here? So like all of the confusion, and look at Kramer. Someone said, what's wrong with this guy, man? What's wrong with it? It's so shameless. It's so shameless. But I was wrong about something one time. A lot of times I do my videos raw and unscripted. So I'll get in a project, I'll come in with my heart. So sometimes I like mistalk and my brain don't work right. So usually if I'm wrong, I'll do an actual video about me being wrong. Super embarrassing. But Kramer, he's got no shame.
He just keeps it
Why
moving,
do people
man.
still listen to this guy?
He just keeps it moving.
So, you guys, very, very much appreciate you. We kind of went off, I'll do the other videos later on the rental market and whatnot. You guys remember WAMU or Washington?
Oh,
jeez, that was a big one.
That was a big one.
That was a big one, man. And didn't I think Bear Stearns bought them, and then Wachovia, and then Chase, I think. I can't remember. Back in the day, do you guys remember how many banks went out of business being bought by other banks, and then another bank would buy them, and then that was crazy.
Didn't he do a video like a couple of days or a week before telling people to buy SBB?
That's what I heard.
Yeah, he did.
Yeah.
He did.
Yeah.
I saw it. I saw it on YouTube. Oh gosh. And he did the same with Bear Stearns as well. He was like, buy Bear, and then a week later, JP Morgan's taking.
I think I was on Reddit, and someone like has like a inverse Kramer pick chart
Yes,
And
I
like,
follow a
you
Twitter
see
account,
that?
same thing.
And yeah, and it is actually, if you do the inverse of what he says, then it's going up. Like you're good then.
Yeah. It's so funny.
It's so funny, man. I'm
So
telling you.
one more, if I can, you guys, and we'll wrap this up here. This is good. This was this was actually, something that you mentioned, Orlando, a little bit earlier. But have you guys seen the audacity of the bank CEOs and hedge fund guys announcing what the Fed will do? Headlines say Fed will do this. Makes me upset if I was Powell. So they're basically acknowledging that the market is fighting the Fed. Does that usually end well, Orlando?
Um, no. I mean, it really depends. It really depends because for someone to believe, and this is the truth, guys, for you guys to believe that Jamie Dimon doesn't have some type of influence with the Fed, it would be crazy for you to think that, right? The big four definitely have an influence on what the Fed will do, right? And that comes from an aspect of, and somewhat concern, but also in the power level that these banks have. The concern would be, the banks talking to the Fed and say, if you do X, Y, Z, you're going to crush our business and you're going to have to dig us out of that, right? So that's one aspect of it. But then, on the other aspect of it, you have, the banks themselves. The banks themselves kind of saying, at the end of the day, we want to like if I go and watch CNBC right now and I see, a B of A guy on there, I totally 100% expect him to say, oh yeah, the Fed is going to pivot. We need this, and it's going to be in their favor. So that's the reason why I tell you guys, when you look at these guys and you are looking at the media and you're looking at these headlines, you have to take it with a grain of salt with who's saying it. If you see a top 4 bank executive saying that XYZ is going to happen or the Fed will do this, you probably shouldn't believe it. But for you to actually think that the Fed is not influenced by these big banks, that would be crazy. They do have some influence. So yeah, I think, grain of salt, you just have to understand exactly. But here's another big thing. A problem is no one really understands the market kind of like how we do, right? So a lot of times I will see something and I'll be like, that's total BS. Who would ever believe that? But that's because of all the experience and all the, and my expertise in my industry and whatnot that I see, for me to easily pick out something and be like, that's BS, right? But someone who doesn't have that experience will take that headline and run with it and say that's what's going to actually happen. And that's the trouble with you having these hedge fund and these media really kind of calling the shots of what the Fed will do.
Okay, well said, well said. We're going to end with this question right here, y'all. So you guys hold off the questions. We're going to end here. Really appreciate the support. Don't forget, guys, go to Market Mania on YouTube. Go to Orlando Miners YouTube. Show these men some love for they didn't have to come here. They're not getting paid. Trust me, I don't have any money to pay them. Have you seen the inflation? I'm spending all my money on hairspray, trying to get my hair down. But this is a good one. I think this is a really good one to end on here. Because there's a lot of people that feel the same way. Even people that I love, people I respect, Jeff, Vital, people that I love these guys. And I see that fear kind of coming back into the buyer's market because of the media, because of the many, many things. So if you guys can, starting with Luke, I want you to talk to some buyers, Luke, from your heart, all right? And I want you to confront what she's saying. I'm so confused. She has us saying one thing, and she has the entire world almost saying another thing. People are confused. They don't know who to believe. They don't know who to trust. They're confused. They're frustrated. Luke, just the best you can from the bottom of your heart. And we're going to talk overall. We're going to talk most people. There's specific situations that are different, specific markets that are different. But overall, will you please respond to that, Luke? They're frustrated. They're confused. They don't know. Should they buy or should they wait?
I 100% understand where you're coming from, and I I really do. Even though I'm not looking to buy in any of these markets, I am looking to buy in other countries. And the thing is, I totally get what people are going through right now. You have to remember that these things happen in cycles and that things don't go down in a straight line. And another thing, I think people have a big fear that the Fed, whatever central bank, can get in here and they can manipulate the market and it's going to run away like it did in 2020. And you have to remember that they injected such an unbelievable large amount of money in 2020. I mean, the money supply grew by like 25% or something like that. So you have to remember that really the chances of them coming out and doing the same thing again, I think, are pretty slim because of the inflation that we've had. And that inflation, it's not just going to suddenly go away either, even if they do start cutting rates at some point down the line or whatever. And you really have to think about the economy in your local area or where you're looking to buy a home. What is the economy based on? Do that market analysis that Travis talks about. Can you rent it out and get a return of any amount by buying a home right now? And what sort of down payment would you need to do that? And you just kind of have to analyze all these different things and work out and do what's best for you. But I totally understand the FOMO is there. It's like I said, all the worst financial decisions I've ever made were easy ones to make when I was following my emotions. And like I said earlier, I can definitely 150%. This is one thing that I've learned to do well, is putting myself in the shoes of somebody else making that decision. And I can understand that it would be easy to go with your emotions considering what's happened over the past couple of years. We've had this casino type environment, even in the housing market. So I totally get where you're coming from, and just realize that, as Orlando said as well, patience, it's not always easy to just sit on the sidelines and wait, but you can go to 1-year T-bills and potentially get 4.5% to just wait. So I think that's a good return considering what we've had since 2008.
Good. Orlando?
Yeah, I think it's, to make it really easy and simple is that if the math doesn't make sense, it just doesn't make sense, right? And a lot of times people will decide to go ahead and buy an overpriced home, knowing that it's overpriced, knowing that they're going to lose at the very beginning. And that just in itself doesn't make sense when it comes to the math. Not only on top of that, a lot of times people will come to me and they will say, Orlando, I want to buy a house. I have the money that's sitting here. It's burning a hole in my pocket. But then when I look at the rest of their financials, they have $15,000 in credit card debt. They only have 2 months of emergency savings, right? And this is what I'm trying to say is that a lot of people who are telling us that they want to buy, they don't have all of their financials in order. If you're paying 27% interest on a credit card right now and you've got $20,000 in debt and you have $20,000 to buy a home, why wouldn't you get rid of the credit card debt first? Right? Why you go ahead and sit on the sidelines and get yourself together? A lot of this FOMO and waiting could be really solved if you look inward into yourself. And I'm almost positive there's someone out there that could fix something else in their financial life that are basic: budgeting, try to get your credit up by paying off your debts, getting rid of your credit card debt. Maybe you have an auto loan that's, a high interest rate and you need to get rid of that. There's a lot of things that we can do while we sit on the sidelines and wait. And we all say this. We're not asking you guys to sit on the sidelines and just twiddle your fingers. We want you to sit on the sidelines with a purpose. Make sure that you get your financial life together, your budgeting, all that other stuff, while you're also doing the research of what homes in your neighborhood have been on the market for a long period of time, so that you can go after that home and say, I know that home's been on the market for 50 days. Oh, wow, I could put in an offer that's below. That's what we're asking to do, rather than just say, you know what, I got money in my account and I need to buy a home now. That's the wrong way to look at it.
Very good, guys. Very good, guys. So here's my answer. I'm going to throw up Wolf's comment up there because I'm going to stay away from that part. Math doesn't lie. The numbers aren't adding up. But as far as the confused, frustrated buyers on the sideline, the thing is, you don't want to be confused and frustrated when you buy the biggest transaction of your life. If you feel confused, if you feel frustrated, if you feel pressured, you shouldn't buy. That's a fact. This is a huge transaction. It should stick with you for the rest of your life. So again, just on that alone, the emotional aspect, if you're frustrated, if you're confused, don't buy. You should not be frustrated and confused when dealing with this. And another thing that they kind of pointed out, guys, is I get a lot of people say, Travis, when is it time to buy? My first question to them, guys, is what does the market analysis say? And they're like, what? I think what's happening, and I'm not knocking you guys, I think people are putting the cart before the horse. You see, you're putting the cart before the horse when the reality is what you guys should be doing is understanding what's happening in your local housing market. And I tell you guys, if you're frustrated, if you're worried, you guys, please, I'm telling you guys, I'm begging you guys, become empowered with awareness. If you're frustrated, empower yourself with awareness. How? I'm telling you guys, how do you find a great deal? How do you know about a great deal? Get in contact with a realtor who has access to live data through the multiple listing service. Go back 4 years and get the average price per square foot sold, average median sales price in the entire city, and also hyper local to the subdivision of where you want to purchase. That way, if you're frustrated, at least you know exactly what's going on in your market. Don't be a victim to being underprepared, because if you're underprepared, if you're not an expert, then all you're doing is purchasing with your emotions. And we know that's not what you want to do right now. We have surveys, we have buyer's remorse. I mean, you guys, stop putting the cart before the horse. Okay. And this is just our opinions. I know, I get it. It's just our opinions. But if the math doesn't make sense, y'all, it doesn't make sense. I've already bought an overpriced house. I lost everything 9 years. I mean, I felt it. So anyways, you guys, I really appreciate, all the viewers, sticking with us. This is about a 2.5 hour live. Luke, love you, brother. Don't forget, guys, go to Market Media Orlando. From the bottom of my heart, man, I really appreciate you guys' genuineness, your expertise, your sincerity. Stick with me, okay? But I'm going to end the broadcast. And you guys, thank you for tuning in with us. Shoot us some comments below. Don't forget to like this video real quick. I'll shoot some other videos out today on the update on the Redfin, daily update on the housing market. But other than that, guys, we really appreciate you joining us. And if you're out there investing in real estate, we wish you luck, and we all hope that you win. And you guys, do